All right, should be good to go. Go ahead and get this stream started. All right, welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Let me know everything is coming through loud and clear. You guys can see and hear. All right, and let's see. So we got plenty to talk about. Obviously, plenty to talk about. So I am focused big time on yields right now. So I'm sure, you know, obviously everybody knows we've been watching the 10-year Treasury. We've been watching the yield curve, the flattening of the curve, the potential inversion of the curve on longer time frames or durations. But now we are seeing the 10-year is breaking out. So we'll talk about that. We'll talk about the pressure on speculative assets, you know, stocks in particular, tech sector, high valuation, low earnings or no earnings stocks. Obviously, cryptocurrencies are included in that category as well. And then what else? We're going to talk just a little bit about proof of work and, you know, energy crisis that's going on right now. And, you know, how it just might not be the best time right now to be spending / wasting energy. You know, obviously what's going on, prices going through the roof, energy shortages, a bunch of miners moved out of China. They moved to Kazakhstan. Now Kazakhstan's having energy shortages, prices going through the roof. So now they shut down the internet to stop the miners. So now again, we're seeing a hit to, you know, hash rate for Bitcoin, et cetera, et cetera. But we'll get into all that. And then also, I just want to briefly talk about on-chain analysis and why at one point in time it might have been useful or was useful, but now it's not useful anymore. I mean, it's not nearly as useful. It still has some use. I wouldn't say it's useless, but it's less useful for sure. So, but yeah, let's go ahead and we'll do that when we get into crypto. Let's go ahead and start with our 10-year Treasury yield. So this is the number one thing that we've been watching lately. We've been talking about it. You know, obviously the importance of it. We talked about how this level was very important as this was our local high. And if we took out that high or if we took out our local low, that was going to be a big deal and likely would preclude or prelude the next move that was coming. We also talked about this level down here and this level right here, which obviously would be taking out the low from the cycle or the, in this case, high from the cycle. And in fact, we did that. So this was a huge, huge deal. Were we surprised by this move? Were we surprised that we took out the cycle high? No, not at all. The Fed told us they were planning on raising rates. So it's no surprise that the market reacted to what they expect to happen, especially with the overly hawkishness of the minutes. And when I say overly hawkish tone, you know, I don't mean like relative to like what should happen and like the world in general. I mean relative to like the dove Fed that has waited way too long and is literally in the middle of probably what will be the policy mistake of our lifetime. Because the entire time when they should have been tightening and they were in emergency full on, you know, pedal to the metal, you know, the economy was literally on fire. There was gas leaking out everywhere. The engine was overheating. We had rod knock. We're ready to explode. And they just stayed on the gas the whole time. And now the economy is cooling down. You know, we're going into slowdown period. We can tell by the numbers. You know, we can tell by everything that's taking place. Cyclically, this time of year is like the slowest time of the year for like retail, for, you know, goods and services in general. And now here they are, they're overly tightening. So they waited way too long to tighten. And now here they are like super tightening. Because now not only are they talking about, you know, reducing the asset purchases from 120 billion a couple months ago to zero by March. Now they're talking about balance sheet reduction. So now not only are they're going to stop buying $120 billion a month by March, and then on top of that, they're going to start selling. They want to taper their balance sheet now. So now they're going to not buy, and then they're also going to sell. And then on top of that, they're not only not buying and now they're going to sell, but now they're talking about 3 or 4 rate hikes as well. So they literally went from full on pedal to the metal, monetary loose, fiscal loose, loosey goosey, let's have a party, to literally let's slam on the brakes, hit the emergency parachute, and jump out of the car while it's still moving. So we literally went from full on, like 100% on, to literally 100% off. So how are the markets going to react to this? I mean, we're probably going to get a taper tantrum. Probably going to get a short-term crash. Honestly, realistically. I don't like to predict crashes. I don't like to call for crashes, but we're going to start seeing the dominoes line up. And, as they start falling, we'll position ourselves accordingly. I mean, we've already positioned ourselves accordingly for quite a bit of this. None of this is unexpected. But now we see with the 10-year, bursting up. And what did I say when we got that first candle coming in? I said it's not even so much about the level. It's not that we went from here to here. It's not that we're at 1.63 and that's just some ridiculous number that just crashes everything. But it's the speed at which we have, the velocity. And this is exactly what we talk about too. We just transitioned from a daily bear market on the Treasury yield that has been in place since November of 2018. And then we switch into a bull market on the daily right here in December of 2020. So we were in a 2-year bear market on yields, and now we confirmed a bull market on bonds, or on yields rather. And then we came back down, retested 200 exponential and simple. That's our reversion to the mean. The same way when we broke down here, we reverted to the mean and we got rejected, and then we went lower. Here we have reverted to the mean. We found support or lower yields, got rejected. The same exact move, just inverse. And now we're going to push higher. So the same way this got rejected and we pushed lower, or it failed to save the trend or reverse the trend, and then it kept on in that direction of the trend, that's the same thing we're seeing now. It failed to reverse the trend right here, which would have been going back to the downside, and instead we found support, and now we're continuing to the upside. So as soon as this holds, it holds again. We put in a higher low right here, and then we take out the high right here. So now we're just headed up to our next target. So we'll just pull back out, obviously our super busy chart setup right here. And again, we can see this was a super key level as well, because we have basically our neckline, coming right here. And that was the neckline of our inverted head and shoulders. That was also the neckline of our cup and handle, depending on which way you're going to look at it. So as soon as we broke through that resistance right here, we now expect to get the measure move. So in this case, we've discussed it a bunch of times. Obviously, I don't mean to just show you the same thing over and over again, but as these things continue to happen correctly as we're anticipating, it's important that we verify, what we're doing is working consistently over and over and over again. And if something doesn't work, we'll look back at it too. We don't just pretend like it didn't happen. We look back at it and say, okay, why didn't it work? What could we do differently? What did we miss? So now we have the measure move, which is from the bottom of the cup to the neckline, burst to the upside. So that gives us a measure move target of basically this red slope line right here, which is roughly 2.8%. So, somewhere in between, maybe the 886, maybe we fall just slightly short at 2.6%. Maybe we overshoot a little bit and we get the actual measure move at 3%. But I would say somewhere between 2.6 and 3%. So, 2.8% we know if we just zoom out and look at the macro here. We can just go to the monthly really quick, and we can see that in our long-term downtrend, going back to the 1980s, this big, thick red line, well, that's just the resistance. That's just the top of the channel. It's the top of the channel we've been operating inside of for the last 40 years. So is that likely to act as resistance when we get to it? Yeah, of course it is. And then what does that also line up with? Well, it lines up exactly with the 200 exponential and simple moving average. So we've been in a 40-year bearish downtrend on Treasury yields. And now we're likely to get a measure move reversal on the daily to take us back up where we will likely get rejected, but potentially we could break out, and we could pay attention to those targets to the upside, what it would look like if we broke out, what it would look like if we had, a Paul Volcker moment where inflation started running out of control, the Fed had to hike rates, and then all of a sudden we had this massive breakout, of the measure move of the channel, which is this green arrow right here, which is from the bottom of it to the top of it, you know, and then where does that take us to? It takes us up to some, you know, unheard of, impossible number like 5.3%. Am I saying that the 10-year Treasury yield is going to go to 5.3%? No, but it is definitely possible. We've seen the momentum picking up. We saw the bullish divergence. We saw the hard buy signal. We left the bearish control zone. We have the Stokes angle powerfully to the upside. We have all green histograms. We're above the zero line. The slope line is just now about to flip over blue. It's about to flip over blue, and we're already in the top half of the channel. So we have momentum on our side, everything in our favor right now, and we're just now moving up to come back up to 200 exponential and simple. So this is going to be a powerful, violent move. And what is that going to do to valuations? It's going to crush them because the cost of money is now more expensive. So if the cost of money goes from 0 to 1 or 0 to 2 or 3 or 5, that's going to hurt valuations by an exponential amount per percentage that the interest rates go up. The valuations of stocks, assets, you know, speculative assets, whatever, goes down substantially. So, you know, I mean, there's, depending on what sector we're talking about, depending on what, you know, asset we're talking about, do they have sales? Do they have earnings? Is it just vaporware? It's going to be a different multiple, but it's not going to be a 1-to-1 ratio. It's not going to be like, oh, well, if the interest rates go up 1%, the valuations will go down 1%. No, it's going to be like 10. It's going to be like 10 to 1. If the interest rates, Fed fund rate goes up 1%, you know, valuations on everything goes down 10% or 15% or 20% or 50%, depending on what it is. And keep in mind, a lot of these valuations, things have already dropped 50% and 75%. We're seeing right now mortgage rates in the United States are at 2-year highs now. Now, historically, are they high? No, they're not high at all. But 2-year highs means that anybody that got a mortgage in the last 2 years is not going to go buy another place. They're not going to buy a better place. They're not going to refinance their mortgage and upgrade. So those people are completely out of the market. None of them are going to be buying anything. And then all the people that were waiting, letting the price go up, waiting to sell, they're not going to sell now. Or, I mean, I'm sorry, I take it back. They're not going to hold now. They're going to try to rush out and sell because they're going to know that as the rates go up, there's less people that's going to be able to afford that place. The valuation is going to start coming down. So that creates a rush for basically like of inventory onto the market. And part of the problem has been like the supply chain, you know, or supply crunch of inventory. So we're going to just start to see just valuations come down. Now, the important thing to realize, though, is we've been talking about this inflation and deflation this entire time. We were talking about the supply chain crunch way back before it became an issue. We were talking about temporary inflation, but we were talking about the macro deflationary environments. But now what we need to focus on is not just this one-sided view of inflation and deflation. We need to focus on the big picture, and the big picture is a combination of the two. We're going to see speculative assets, you know, houses, stocks, cryptos. We're going to see these valuations coming down. We're going to see that multiple compression that we've been talking about. Okay, because we pulled forward a bunch of demand, so there's going to be less buyer for those things. We priced in super low rates, so everything is at elevated valuations, and then we gave everybody a bunch of money that they either have to pay back or, you know, pulled forward all this excess demand. If you just bought a car last year, you're probably not going to buy a car again this year. And maybe if all of a sudden you lose your job or, you know, your assets that you've been speculating on go down, maybe now you sell that third car. Maybe now you sell some of, you know, those things you speculated on, or those extra little perks, or that second home or whatever. So again, not only do we not have those buyers, we now have selling pressure coming in from those people as well. So what I'm expecting to see is things like speculations, things like, you know, consumer discretionary come down, but I expect to see like goods and services, like consumer staples and necessities, things that people can't go without, continue to go up. And even if they don't go up as fast, even if inflation slows down but keeps going up and it goes, okay, it was at 6%, but now it's only going to be at 3% from now on. Like 3%, but keeps going up consistently. It doesn't just go down to 3% from what it was a couple of years ago. It just goes to 3% from what it was the year before. And that's another thing that we need to talk about right here real quick, because people are missing out on something crazy. And I don't know how nobody realizes all this stuff. These numbers that we get, these numbers that we see, the ones that they present to us that everybody freaks out about and the mainstream media talks about, and the inflation and this price compared to last year, and this is up 20% and this is up 15%, and CPI is 6.2%, the most it's been in, 30 years, 40 years, hyperinflation. Okay, that's all well and good, but let's keep in mind, these are year over year numbers. These numbers are year over year. So if we're seeing 6% year over year numbers from last year, next year, this same exact time, we're not going to see the prices up another 6% over what they were up this year. Because if you took that, that would be up from 2019 levels to 2020 levels, and then from 2020 to 2021 levels. And now we're not going to see 2021 levels to 2022 levels up another 6%. It's not going to happen. I'm telling you, it's literally not going to happen. Not in the United States anywhere. Maybe in Turkey, maybe in some other, third world countries or whatever, fourth world, fifth world, whatever. But it's not going to happen in your regular developed countries on the majority of assets. It's not going to happen. It's not sustainable. It's not realistic. It's not viable. Not going to happen. So while we will continue to see inflation, I think the Fed has completely missed the boat on this. They were wrong about there not being inflation in the beginning. And I told you the whole time that they wanted inflation, that they're not stupid. They knew there was inflation, but they wanted it. They've been trying to get it for 20 years. They finally got it. So they said, hey, we finally got the inflation. We're on a roll. Let's keep it running for a little bit. We'll just look the other way. We'll act like it's not going on. And now they're scared because they're like, oh shit, we got all the inflation we wanted plus more. And then you hear Jerome Powell saying, this isn't the inflation that we wanted. This is not what we expected. We see the whites of the eyes of the inflation, and this inflation is scary. We thought it was going to be nice inflation, this bad inflation. We got to do something about it. So now I honestly believe the inflation is transitory. It's getting ready to go away. There's all these stimulus, this fiscal, these monetary policies, everything is fading off. It's going away. We pulled forward all this demand, and now everything's slowing down already. And then seasonally we're getting slowdowns. And then on top of that, now the Fed is not only just, tapering the asset purchases. Now they're talking about tapering the balance sheet. Now they're talking about raising rates. So they literally went from 100% on to 100% off. We talked about how there's 3 different levels. There's asset purchases, there's balance sheet reduction, and then there's full on raising rates. And they literally just went from full on to full off. Or, at least that's what they're claiming they're going to do. So maybe they could scare the markets into thinking no more inflation, whatever. Maybe the inflation's already about to go away on its own. And then afterwards they'll just say, see, we did it. We fixed it. Everything's good now. We told you. But I honestly think that we're already about to. I honestly think, even though the numbers will lag behind a little bit, I think we have already reached peak inflation. I don't think we're going to continue to see inflation. We might see speculative inflation. We might see people rushing out and buying things that there's still shortages of, or necessities as people are afraid of this, that, and the other. But I don't think they're going to continue going up. I think we have already reached peak inflation. We see the economy slowing down. We see we have a tight jobs market. We see there's record quits. We see we're getting less and less new hires. We're seeing basically everything normalize with the new strain. And it's like, okay, people aren't even afraid anymore. But now it's like, oh shit. Well, now if something goes wrong, we don't have any more excuses. At least before we had a bunch of excuses. It was like, oh, it's the supply chain. Oh, it's the extra money we printed. Oh, it's the new V. Oh, it's the old V. Oh, it's I got to worry about this. Oh, I'm reevaluating my life. Oh, we're working, via the internet. Well, what's the next excuse going to be? What's the next excuse going to be? Oh, hot war? Who knows? But it doesn't even matter. We're seeing it play out in real time. So as we see these yields burst into the upside and taking out this macro low here, and we're expecting to get this measure move coming in here, what are we paying attention to? We're paying attention to these Fibonacci levels here in yellow. So from our peak right here, when we sold off, when we topped out at the top of that red channel at the resistance, and we came down and we hit our support perfectly, we have to this wick down here, our 0 line. We have from the top here our 1 line, and what happened? We retraced all the way up just above the 618, and now we broke up to a new high. So our next short-term target is going to be the 786, which is a nice round number, 2.08. So what's our next target? A quick move up to 2%. At which point in time we probably consolidate for a little bit. We maybe sell off some and then burst back up, and then we hit our 886 and then consolidate for a little bit and maybe come back down. We retest some levels. Same thing. It's just a stairway up here. But that's what we're paying attention to. We've been ahead of all this whole entire time, and we're going to stay ahead of it this whole entire time. We're going to keep ahead of all this stuff. So whatever the mainstream narrative is, whatever you hear, let's focus and keep our minds right and focus on the target and what's actually happening. Because we've been on top of this stuff, we're going to keep on top of this stuff, and we're going to keep getting in front of these trends and getting out of the way of the freight train. Because I'm going to tell you right now, freight train is wrecking people right now. People aren't talking about it, but how many people are upside down on crypto right now? How many people have not only not made money, but they've lost money? How many people have not only not made money in the stock market, but they have lost money? They might have started off making a little money in the beginning and they were dabbling around a little bit, and then they started using leverage, they started putting in more money, they started buying the dip, they started buying that dip. And then if you look at the most of these stocks that people were speculating on, most of these big names, most of the markets in general, and that's just the US markets, which have been doing, disproportionately well compared to other countries' stock markets. So while the US stock market was doing great, there's still massive pockets inside of the stock market that we're not even doing good. We talked about how the indexes have been giving, basically a fake idea of how good the stock market is. But when we break it down, we look at these individual stocks. Many of them are off their highs 25%, 50%, 75%. So, people sitting around acting like they did great and they're doing good and they're winning. And I'm telling you right now, all these people that came in the last year or two, most of them are underwater on their positions. Most of them are either going to sell out, capitulate, or just be done with it. Because they got sold a bad bag. And it is what it is. Sorry about your luck. We saw it coming. Try to warn people. Doesn't matter. Sorry about your luck. It's over and done. So now what we do from here, though, is we got to reposition based on what we think is going to happen from here. I mean, when we see, Bill Gates and Elon Musk and, all these big billionaires selling out, maybe warning signs. I mean, I don't know, but you guys know. You already know. So TLT breaking down, losing the trend. We obviously know what's going on here. Paying attention, obviously, to TNX or TLT. We're looking at the VIX back here, still in the neutral zone. Nothing particularly going on. We are getting the hard buy signal, but we're essentially just right at the neutral zone. So U.S. oil came back up here, actually took out where we were expecting it to potentially short-term top out. So at this point in time, we have triple bearish divergence on the weekly. We are essentially retesting the middle zone of our ascending broadening wedge. Seeing 1 day, 2 days, of weakness here. I think we're going to top out around this area. Not forever, not on the macro, but for now. I think we're going to top out here and roll back over, and then we'll see what happens. I do still think we take out this low, the $66 target, but we'll have to wait and see. I mean, there's still a lot of factors in this. You got everything going on with OPEC. You've got the energy shortages obviously going around, the whole green energy movement, all that stuff. So there's a lot of factors with this. So while I'm not trying to short oil or anything by any means, in my opinion, this is a buying opportunity at the right level. But you guys know how I feel about oil. I've been bullish on oil. We got bullish on oil when everybody else was bearish on oil. Obviously. You guys know. So Dow Jones now. What's going on? We've got, bearish divergence on the weekly. We've got bearish divergence on the daily. We've got a hard sell signal coming in here. So, we're definitely seeing a little bit of exhaustion on these markets. Same thing with the S&P. We've got bearish divergence on the weekly, bearish divergence on the daily, losing the 821. Looks like we're getting ready to come down on these things, probably for about a 7% correction. So we talked about the NASDAQ, how essentially this was looking like a toppy sort of head right here. We expect to come back down to the 200 exponential and simple, potentially that neckline. If we get back down to the neckline, we're looking for a bounce back up and then a potential head and shoulders topping pattern. We may get a limp shoulder, something like this, a pathetic little shoulder. We may not get it at all. We might just drop right through this. Who knows what's going to happen? I mean, we could easily just continue going to the upside. The Fed gets there, reverses policy. I don't think it's going to happen, though. Do not think it's going to happen. But, I mean, we'll wait and see. But, this has been playing out, basically exactly as we expected. So, this is going to be the worst sector. growth is going to be the worst sector to be in, and it's already been getting crushed. So just remember that term, that multiple compression, that we brought forward all this demand, that we speculated the prices up ridiculously high on these things. So when people are like, well, it's already down 50%, it can't go down another 50%. Sure, it definitely can go down another 50%. The Russell looks terrible. Officially in a bear market, confirmed a bear market. 200 exponential and simple have rolled over. It did do it here just for a taste twice. And now here we are coming back down to the bottom of the range. This time I think it breaks. I think it's time it breaks. And, if it does, when it does, I'm looking for the measure move breakdown from this. And then this is going to basically scream, at the top of their lungs, bloody murder to the stock market. Because the second one of these big indexes goes into a bear market, that looks real bad. That looks real bad. Right now, it's just a bunch of stocks in bear markets, but it's not the actual index. So if this rolls over here, that looks real bad. Energy sector looks great, breaking out. Keep in mind, this is not all-time highs. I think, depending on what happens with oil, I think we come back down, retest this, and then we see continuation. XLI industrial trying to break out here again, consolidating. I don't think it's going to last. I think this is going to break back down. I think we're going to end up double topping right here and coming back down inside the range. XLB material, same thing. We took out the high. We got this candle right here. And what is that candle? Shooting star rejection. Is that reliable? It's enough to open our eyes and say, wait a minute. Higher prices got rejected. We hit new all-time highs, consolidated at the previous highs. We should be bursting to the upside. We started to burst to the upside. And instead of people getting on board and buying into that and the price continuing, people sold into it. The highest volume we've seen since the low back here, we saw at the top of that candle, which means instead of people buying into this, we saw a combination of the buying the breakout and then selling into it. More volume than we've seen recently, telling us this potential topping. And then obviously it's a toppy candle. We lost support. I think this thing breaks down. It looks bad. I think it was a failed breakout or a throwover, in my opinion. XLF, financial sector. This could go either way, to tell you the truth. Normally, I would not be bullish on financials. But the truth is, raising rates may be enough. See, here's the thing with financials right now. They have been at super low rates. Financial sector has been doing good. How is that? Because what does the financial sector do? They basically borrow money, banks and all these, companies, JP Morgan, Chase, all these, big conglomerates, they borrow money from their clients, give them pennies on the dollar to borrow it in interest rates, and then they speculate. Or they borrow money from, whoever, and then they speculate with that money. And where do they speculate at? Well, the markets. So the markets are going up, so they're speculating, so they're going up also. Even though rates are super low, they're basically arbitraging like the difference between the Fed fund rate and what they have to pay clients, or between the Fed fund rate and what they can make in the markets, etc. Or, mortgages, whatever the situation is. So even though the rates are going up, which normally would be a tailwind for financials, we're also going to see multiple compression and stocks going down. So that's going to be a headwind. So I think these are going to be real choppy and volatile. I don't want to be involved in financials, to tell you the truth right now. Because it's going to be a push-pull. It's, it's two teams pulling on a rope, and then eventually one of them is going to break. I don't know which direction it's going to break in. I already think they're at ridiculous valuation, so I would be inclined to say down, but that's just an opinion. That's not technicals. XLY, consumer discretionary. So we already talked about this. I think discretionary spending is going to fall. People are not going to be buying as many Teslas. People are not going to be buying as many, high quality or high cost goods and services. Why is that? Well, poor people won't have money, or whatever. I'm sorry, I don't mean to insult anyone. Middle class, to low class, or I mean, low class sounds even worse. Would you rather be called poor or low class? I mean, I might be poor, but at least I'm not in low class. I feel like it sounds worse. Anyway, low class, lower class / poor people and middle class are going to get hit the hardest and not have the money to spend on these things, as a lot of these, a lot of this easy money, free money, like socialism programs fall off. You got to pay your rent again. You got to pay your student loans again. Credit card debt's up. And then the rich people, the ones who are normally buying, these yachts and, these Gucci bags and Teslas and all this expensive stuff, they're smart, or they wouldn't have been rich to begin with. So they're going to cut back on their spending also. Not because they don't have the money, but because they're being smart with it. And they're like, oh, economy is cooling off, stock market's cooling off. Let's not be reckless with our spending. We'll wait and we'll get stuff at a discount in the future. So this is going to take a hit, in my opinion. XLP, consumer staples, this is a safety play. People are going to have to buy this stuff. People are not going to stop buying the things that they need to live. And when I say things that they need to live, no, you don't need Coca-Cola to live. But I mean, let's be real. It's part of the daily life of these people. You know what I'm saying? Like, what's going to do well? Dollar stores, Walmarts, Coke and Pepsi and, all the cheap stuff. People aren't going to be drinking that fancy coconut water, okay? They're going to be drinking dollar store energy drinks or dollar store, 2 liters of Coke. I mean, I hate to say it, but they're not going to be shopping at Target. They're going to be shopping at the dollar store and Walmart. I mean, this is real as it gets. So all of a sudden, people start cutting back. XLP is going to be strong. This is a safety play right here. So while I don't think it necessarily just goes parabolic, I think it stays stronger than a lot of these other sectors do. XLV, healthcare. Now, I would expect healthcare to stay strong overall. Obviously, we're seeing quite a bit of weakness in it right now. But we did hit our target to the upside. I mean, barely. I did think we were going to get slightly higher than that. But we have broken back down through those 2 levels that we broke through. So now we got to see where this comes down to. Now, no surprise, we did get the hard sell signal, obviously, on the Jewel Thief. So, no surprise here. Obviously, a bunch of red histograms. We lost the slope line. We lost support. The 8 and 21 are getting ready to cross the downside. So what's our target? Well, it's going to be the 200 exponential and simple. So 128, I'm expecting. XLU. So obviously, utilities, another safety play. We broke back down to support. Potentially looking at a double top right here. Putting in some bearish divergence on our indicator oscillators on the TJD, TDMACD, and the Jewel Thief. Trying to rally back up here. Again, I don't think this is just going to go parabolic, but I think it's more of a safety play. So they may all go down, but I think some of these go down a little less, if that makes sense. But we got to be careful with healthcare too, because, as people stop really caring about this and, stop speculating on, the jab creators, we can potentially expect the valuations of some of these companies, Pfizer, Moderna, J&J, some of these to have that quote unquote multiple compression we've been discussing. So I fully expect that to take place, and that could put pressure on healthcare because that's been some of the high flyers. So we got to be careful with what's going on here. And that's why I've been saying we build up our cash positions, we de-risk, and we sit back. It's nighttime now. It's getting dark. Everybody's scared. They're running around. They can't see anything. Running around like chickens with their head cut off. And what are we? We're that gator. We're just creeping in the water, just our eyes above water. We see a couple spots, couple pieces of meat we could sink our teeth into. We could probably get a hold of them. We could probably drag them down low, but let's wait till they get a little tired. Let's wait till they get in a little deep and they start panicking, start running out of air. And then we strike. We take the easy prey, okay? We're predators. We don't run after something in an open field and chase it down and tire ourselves out. No, we're lazy. We're taking our time, okay? Because we're going to strike. We're going to strike hard. We want to buy, not at the bottom. We don't have to get things at the best price ever, but we're going to get them at good prices. We're going to get great valuations. We're going to position ourselves for the next, 3 years, 5 years, 10 years, 20 years. We're going to scalp along the way, not just in stocks, not just in cryptos, not just in commodities. We position ourselves for everything, for our long-term, retirement accounts, for our speculative scalping, trading, swing trading accounts, all that good stuff. XLK, technology, let's be real here. This is distribution pattern obviously taking place right now. We did exactly what we said. We topped out at the red resistance. We came down to the green support. We're at that support now. The measure move breakdown takes us 200 exponential and simple. This is where we're going to see more multiple compression taking place. As what's in XLK, a bunch of things that don't make money, a bunch of tech stocks, speculative, anything that is right now if I was going to do fundamental analysis on someone's portfolio for them, and they handed me, a list of all the things they're invested in, their cryptos, their stocks, their, whatever, I would look through it. And the first thing I would look at is every single one of them. And I would look, what is their PE ratio, price to earnings? And if they don't have earnings because they're not a profitable company, including cryptocurrencies, I would look at the price to sales ratios next. Obviously, cryptos don't have price to sales ratios either. But, most of tech stocks do. All that means is they have a sales number, they're making sales, but they're just losing money. So they're making money, but they're losing more money than they're making. So they have income, but they're not a profitable company. And then you have your cryptos where there's no actual like fundamentals. That's like purely speculation based on like white papers or dev teams or whatever. So I would look at those assets. I would look at what I'm invested in, and I would say, what have the highest multiples? Okay. So price to earnings are the best things to have right now because at least they're profitable companies. Price to sales, well, you don't want them to be real high, but at least they're, generating income, theoretically going to make a profit in the future. No actual numbers, no nothing. I'd be a little worried. Let me put it that way. I'd be a little worried because proportionately, as we're at one end of the curve where we have our, price to earnings ratio, and then at the other end of the curve, we have our nothing, white paper, dev team, speculation, the internet 3.0, the metaverse, whatever it is. And it's just a couple like key marketing words, with no actual numbers to back it up. I would expect, the price to earnings stuff to take, let's say, a 10% hit. I would expect the price to sales stuff to take a 25% hit. I would take the expect the vaporware to take a 50% hit, or something along those lines, roughly. So that's what I would be paying attention to. If I was going to reevaluate my portfolio now, in 2022 at the beginning of the year and say, okay, what's going to do well this year? What's going to get wrecked? Let's look at the overall environment and what's going on. If rates are going to go up, if the Fed is going to taper their balance sheet, if the Fed is going to stop purchasing assets, that means that there's probably going to be multiple compression into a slowing economy when we know that suppliers for the first time ever or businesses for the first time ever have, high levels of inventory because they had supply chain issues. So they overbought, they double, triple, purchased, restocking their inventory, hoping to get it in time for Christmas, going into a slowing year end, going into, the later years of a parabolic, uptrend, coming out of the fastest recession in history, not able to get their stuff off of cargo ships, but they've already ordered it. They've already paid for it. They paid record transportation prices. They paid record, prices for their goods. So now all of a sudden this inventory is going to show up. We pulled forward all this demand. The consumer is running out of money, maxing out credit cards. The economy's slowing. We have all these factors now telling us that things are not going to be good. And then on top of that, we have all these businesses that are going to have too much product, all these people that are going to have too much product and not enough money. Got to be real careful here with what we own, what we're invested in, quote unquote. Okay? Real careful. I think now is the best time to reevaluate. And if you're really not sure, or maybe you're completely skewed to one end of the spectrum, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly, understand that any one of these things can completely do the opposite in the short term. We could have a completely speculative cryptocurrency go up 100% in the next week. We could have a completely shored up balance sheet, great profitable company go down 20% in the next couple of weeks, or anything in between. If I'm talking about the macro overall trend, if this should last for 3 months, 6 months, 1 year, 2 years, 5 years, a decade, God forbid, we see a 10-year, stagflationary environment, make sure that we're positioned accordingly. And the best way to do that is to just reevaluate. Beginning of the year, let's reevaluate our investments. And if we're not feeling good about something, if something doesn't look good, maybe we're upside down in it, it's okay to take a loss early in the year and write that off. Again, I'm not a financial advisor. I'm not your tax professional. I'm not giving you tax advice. many of the people in this, community are international. So I don't even know what your tax code is in your country. But the two best times, in my opinion, based on my experience, to go ahead and take a loss on something are at the end of the year when you want to offset your gains, and at the beginning of the year, because you can go ahead and just offset that, deploy that money somewhere else. Things are changing. There's potential opportunity somewhere else for it. It's okay to go ahead and just, pull back a little bit of that liquidity so that we can deploy it somewhere else. We don't have to pull a Cathie Wood. We do not have to double down on our losers and then double down again and then double down again and then get on live streams and beg people. We don't have to beg people to just believe in us and just keep saying we have a 2 and 5 and 10 year time horizon. No, we don't. We're not doing that. We're not playing that game. Okay? I don't give a damn if you have a 2 year, 5 year, or 10 year time horizon. You don't take 50 to 75% losses. You don't do that. We do not do that. That is the stupidest thing I've ever heard in my life. If you have $100, okay, and you pull a Cathie Wood and you lose $75 of that 100, you now have $25 left. So in order to just get back to break even, you lost 75%, you need to have a 400% gain. You need your $25 to 4x. Well, it's a 300% gain, but you need it to 4x because you have $25. If 100% gain, it goes to 50, and then 100% more gain, it goes to 75, and then 100% more gain, and you're finally back to 100. So the last thing we ever do is take exponential losses like that. Ever. Number one, top priority is to protect our capital, preserve our principal, because we cannot make money if we lose it. It's so much harder to make money back after you've lost it. And you guys all know this because I've been preaching it to the choir since day one. So it's crazy right now. I can't believe what's going on. And, the way people are talking, and it's like, oh, well, I'll just hodl it. Like, there's another bull market coming around. Everything's going to be okay. It's absolutely ridiculous. Keep in mind, a lot of these people, these influencers or investors or investment advisors or, talking heads have not even been through an entire cycle in cryptocurrency or, anything but a parabolic bull market in stocks and bonds. So just remember, if you're taking advice from a kid who can't even grow a mustache or a beard, if you're taking advice from, a pretty girl in her 30s, that looks more like an Instagram model than, a financial, I don't want to say anything mean, but she doesn't look like she belongs in the financial world. Maybe just reevaluate what you're doing. So let's keep moving on here, though. Sorry if I'm lightweight lecturing / ranting right now, but I'm just seeing full on retard status all over the place right now. And it's you can pray in one hand and you can shit in the other and see which one fills up first. And I bet you it's not going to be the prayer hand. I'll tell you that much. XLC communication, trying to avoid this bear market. So we got the retest of the 80, got rejected, got a massive sell back off here. The 200 exponential has rolled over bearish. 200 simple is basically flat. This looks like it is full on getting ready to go into a bear market. I do expect this at $71.60. XLRE. So real estate obviously starting to take a hit. The extra 1% tacked onto interest rates, is going to be a big deal. Obviously Fed, raising the Fed funds rate, it's obviously going to cause damage to the real estate market. So while I do think that this holds up better or at least longer, it's definitely going to see some pain, at least in the short term. We'll see what happens from there. Fed could reverse their position a month or 2 or 3 from now, depending on what happens. I keep hearing too from people, it's like, well, as soon as the stock market crashes 20%, the Fed's going to reverse and then back to zero and it's free sailing, free clear, everything's gravy. But we heard Powell saying something last year that makes me think otherwise. He kept saying we have to be really careful because the Fed cannot appear to be biased on political decisions. And we know for a fact that obviously the Democrats are in charge. And now here we are at midterms, getting ready for some key elections for control of, the House of Representatives, I mean, we'll see what happens with Congress. We'll see what happens in the Senate, in the House. But there's a very high likelihood they're going to flip back over Republican, and probably big. And let's keep in mind, too, that Powell's a Republican. So while he may not say, or he may say, or may not act to be, politically biased, and maybe he's not, his inaction alone can cause massive move in what's going on. Because if he just says, well, we can't appear to be biased, so we have to be hawkish because of inflation, and we've reached maximum employment, that alone basically is going to be a hit towards the Democrats. So we got to be real careful. And I noticed something in the last stream too. I'm not going to call them out, but, we had a conversation about rates in the chat for a couple minutes, and I couldn't understand why this dude was just like not grasping what we were talking about, basically about the Fed tightening to stop inflation. And I could tell he was like getting emotional, and it was like, what don't you understand, my dude? And I realized that he was probably super over invested or over leveraged and probably in some massive losing positions. And that's why he was getting so emotional. And he made a statement specifically, why won't they'll reverse it? They're going to lower the rates again so we can make money. And it's like, okay, I see what's going on here. I see what's going on here. And a lot of people are feeling that way. They're sitting here saying they can't raise rates. They can't put pressure on these markets. They can't let the stock market go down. They have to help us. They have to push it up. They have to inflate these asset prices. That's the wrong attitude to have. They do not have to do anything. They could literally do nothing. Or they could do the opposite of what you want. That's super important. So transportation sector, looking very, very toppy here. So obviously, when do we talk about cyclically this tops out? End of December, beginning of January. Every single time we see tops and bottoms in this thing, it's right around this time. So this looks like it's under pressure, and I expect it to continue under pressure. Hail looks terrible. Right back down here at support. If we break down from support, we're going to start testing these key levels. Looks absolutely terrible. And as we see rental car prices, as we see used car prices come down and demand come down and some of this inflation to come back out of the used car markets, keep in mind who overpaid a shitload for all these used cars because they sold all their used cars when we went into the pandemic to begin with. So all these rental car companies liquidated all their rental cars because we were about to go into this like big slowing environment, and they're like, oh, quick, sell everything because nobody's going to ever need a rental car again. So they just liquidated everything. Then all of a sudden, we go into a V-shaped recovery or K-shaped recovery or whatever, and now there's no cars because everybody got a bunch of money and they all went out and bought up all these cars. So then the rental car companies had to go back and buy back all their same cars or newer cars or older, worse cars for more money. So they overpaid. They literally bought the top of the rental car market and drove up the prices on used car market. And now they're stuck with a bunch of extra used cars now. And keep in mind, some of these companies were literally bankrupt, filing for bankruptcy not too long ago. And now they literally bought the top of the market. So if we see any kind of pain, what's that going to do to them? Jets had a nice little bounce here off support. Probably going to come back up here. Test resistance, test the Fibonacci, test our 200 exponential and simple, the 236, and then roll over. And then I expect it to hit our target to the downside. Jets looks terrible. That's our measure move is the 0.5. I fully expect it to get down to 18. UPS looks strong here at resistance though. So at resistance, I think it tops out right here. Is it possible it keeps running? It just goes parabolic. It just keeps creeping to the upside, goes to new all-time highs. We get the measure move, the breakout, continuation. We hit the target of 244. It's possible. I don't think it's likely though. I do not think it's likely. But we keep in mind that these markets can stay irrational longer than we can stay liquid. So we do see some bearish divergence potentially developing. If this rolled over now, it would be clear bearish divergence. But we're also at resistance. Could just keep ripping. And then it invalidates the bearish divergence. FedEx finally hitting our target to the upside. Almost done with this trade setup as it is about to tag the 200 simple. But looks very weak in comparison. Very, very weak. I mean, we look at FedEx. It's at all-time highs. We look at we look at UPS. It's at all-time highs. We look at FedEx. And this thing is still off the highs by, 18%. So not good. Pave, looking at that infrastructure play, looks like that double top off of our Fibonacci extension. So I don't love the 1.786, but obviously somebody in the market is using Fibonacci extensions. So I do fully expect it to come back down to the 1.618, retest 200 exponential and simple, and then obviously we see some very clear bearish divergence taking place. If you're not using these indicators, if you are not using the indicators that are free, go down to the description and get the indicators and use them. They're amazing. Start charting your own assets. Start learning how to use them. Start following around. This is the time to learn. This is the time. You don't need to learn anything when everything's going up and we're in a parabolic cyclical bull market and everything's just going up and you can just buy whatever Kim Kardashian says or your favorite Instagram influencer or TikTok thought or whatever. But when we're in a bear market, we need to pay attention. We need to learn. We need to spend that time to sharpen up our tools so when it's time to hunt again, everything's sharp and ready to go. Also, obviously, just released the new version of the Jewel Thief. It is now officially available, but it is only available to group members with the TJD Masters. So just one more perk for anybody that's been using our previous iteration of the Jewel Thief or of some of the moving average indicators. These two are by far superior. I highly recommend them. So, if you want to invest in yourself, there's definitely an opportunity there. So you can reach out to me if you're interested in that. It's a pretty modest contribution, that I ask to get the indicators, join the group, etc. So, if you're interested in that, let me know. Obviously, I provide tons of free technical analysis and resources, in streams and via the indicators, charts, etc. So, obviously, feel free to do that. I know not everyone's in a position to make a contribution, but it is a one-time contribution. And as far as I'm concerned, it's pretty reasonable. So let's look at Bitcoin now. Let's look at our cryptos. Let's look at what's going on here. So we know officially our Bitcoin futures chart has officially rolled over bearish. So we are now officially in a bear market for the first time since we came into the bull market. And we're going by when the 200 exponential and simple flipped over blue. Both of them turned blue right here at roughly like $9,000. We went into a parabolic uptrend. Here we saw 200 exponential flip over red, but the 200 simple still had a positive slope and we're well above it. Here we saw 200 simple started hinting that we were potentially going to go into a bear market. And now here we have broken down. We have the 8 and 21 crossing the downside in red. We have the 200 exponential and simple. Both have a negative slope on them. We have officially entered into a bear market. The last time we entered into a bear market was when we entered into the bear market right here, and that was the CVD dump. So we entered into the bear market, and then we immediately capitulated. So does that have to happen? No, but that's what happened last time. And the time before that when it happened, well, this was our 2018 top. So we'll look at the regular Bitcoin chart in a second, and we can get a better idea with a little more time history, obviously. Bearish divergence on the weekly Bitcoin futures chart. The 821 has officially crossed to the downside. This is danger zone. The 200 exponential and simple are way down here at $20,000. So do we have to go to $20,000? No. Does it make sense that we retest 30 and then we go to 20 after that? If that doesn't hold, yep. Is it going to happen in one candle? No, it's going to probably be a stair step along the way. So here is our Bitstamp chart. And again, we see, we did get technically here, we flipped into a bear market, but we were actually buying that triple bullish divergence here. Technically here, we tried to flip into a bear market, but we were still buying 200 exponential and simple. But we're scalping. We're expecting potential flip of the market right here. So we sold the top here. We sold the top here. We bought the bottom here. We bought the retest here. Okay. And now we're scalping little scalps along the way. But now we are net negative in these markets. We are no longer bullish in these markets. We have flipped over the 200 exponential. Technically, the 200 simple still has a positive slope, but that's just because it's a lagging indicator, and this is open on the weekends. I trust the futures chart far more. Now, is it reasonable to think that we get a pushback up to 50K for a retest? It is. It's definitely possible we get an immediate pushback up to like 50K. Maybe we fill out what would look like, basically, some kind of like head and shoulders type pattern. It's definitely a possibility that we do something like this. Short term, we get something like this. What I'm going to be looking for is, does it look like we're basing out around this key support level? I mean, for now, but I really got to see some kind of positive price action, a little momentum shift, a couple green histograms, a little cross, exit the bearish control zone. Maybe we flip the 821 back to the upside. What I want to see is, I want to see this at least come up and take out this previous high to get bullish on it at all and reclaim the 200 exponential and simple. What I don't want to see if I want to be bullish in the markets is this. I do not want to see a weak right shoulder rejection off the 200 exponential and simple. If we get a reversion to the mean rejection right here and a weak right shoulder, that typically results in a powerful move to the downside and an overperformance of the pattern. Now, this pattern only plays out, 60, maybe 65% of the time. So if we flip a coin, we flip it 3 times, we got a head and shoulders. 2 of those times it goes in our favor. 1 of those times, it goes and keeps running to the upside or breaks out above this level or whatever. So, it's by no means a 100% guaranteed this is a head and shoulders, short Bitcoin, it's going down. Not by any means. And matter of fact, we're at support right now. So the last thing I would be doing is shorting into support. I would actually be buying support for the reversion to the mean retest. Do I think we should buy right now? I'm not saying that. But what I'm saying is the trend is potentially looking like a downtrend now. We're at the beginning of a potential bear market. Cyclically, 4-year cycle, we're seeing, potential like double top. We're seeing potential head and shoulders, micro top right here. We're seeing moving averages rolling over. We're seeing literally every day more and more signs of a potential bear market. And every previous bear market has been, an 80 to 95% pullback depending on Bitcoin or altcoins. So be real careful here. That's what I'm being real careful here. I'm being super conservative, and I'm already conservative. You guys know that. So what does that tell you? Well, you got to do what you got to do. But we see the 8 and 21 have flipped over. We see powerful red candles to the downside. We're seeing, this is months of downtrend action right here. And remember how bullish everybody was? New all-time highs, 100,000, bags are packed, let's go, moon, come rocket. Well, sure. Dogecoin, Shiba Inu, 100,000, a Citadel. Okay. Sure. Hard sell signal. Left the bullish control zone. Stoch's powerfully angled to the downside. Red slope line on the TJD TDMACD. All red histograms. Not even a sense of life from the bulls on the weekly. Bearish divergence. 821 cross to the downside. I can't. Is there anything bullish on this whole chart? Maybe support right here, and even that we broke. The weekly support was here. The weekly support was at 43,000, and we already closed below it. Could we rally up right here and reclaim it? Sure. But we already closed below the support level. So now we could look at this top right here. We had a couple candles close at like 39,000. Well, that's not far. Maybe we just go down to 39,000. That's not so bad. Sure, maybe. Or maybe we come down here. Maybe we retest, the 31,000 level. Maybe we just go straight to 200 exponential and simple. But there's a lot more bearishness on this chart now than there is bullishness. And I'm not saying that because I'm mean. I'm not saying that because I don't like crypto or I hate people making money. I'm saying it because it's the fucking truth. But you know what they say about the truth. The truth hurts. Sometimes. Sometimes truth feels real good. Get that off your chest. Ethereum. Oh, sorry. I was doing a little scalps over the weekend on some of these altcoins. So Ethereum looking real weak. We've been talking about this. Ethereum has been extremely strong. And now we broke down from that key level. Broke down from that key uptrend. What did we say? We broke down from the entire bull market uptrend. That's bad. We broke down from this little mini micro downtrend. That's bad. We lost the 200 exponential and simple. That's bad. So we just did 3 really bad things on Ethereum. The bears are in control. Bunch of red histograms. Slope line is powerfully angled to the downside. Ethereum looks terrible. Looks terrible right now. Still looks better than a lot of stuff because it just now broke down. It still has technically positive slope on 200 simple, but it looks bad. And we knew this was going to happen because we're about to look at the Bitcoin to Ethereum chart right now. So first target to downside, when we talked about this, it is that 30,000 level. We already tagged it. We held it on the weekly. That's good for now. But the next target is going to be that 236. So now we have to look at our macro fib. From the low right here, arguably, I believe we could technically draw it from this low right here, slightly lower, but I don't think it makes a difference. So, because I think this was like a couple dollars less. This was $80. This was like 85. 80 and 89. So literally makes no difference in my opinion with that big of a move. So from the bottom to the top right here, our initial push down will be to the 236. 236 is at $1,850. It's not just going to go there tomorrow. It's going to stair step its way down. Maybe it pushes back up to 4,000. Then it goes down to, 2,800. Then it goes back up to 3,800. Then it goes down to 2,500. But 1,850 is our target. Once we hit the 236, if we hit the 236, then we confirm that we have potentially topped out on this. Probably get another move back up to the upside. That's our A retracement, our B, and then our C, we come down to the 382, 200 exponential on simple, and our potential target of around $1,000. Okay? Bearish divergence, bearish divergence. We're on the weekly. Red slope line is flipped over. Hard sell signal. We have left the bullish control zone. The 8 and 21 are crossing to the downside. We have broke down from an ascending key uptrend channel. But you're only saying that now that it already happened. No, I've been literally talking about all this, expecting it to happen, anticipating it to happen, planning and participating in these moves in advance. So, and if you don't believe me, just go back and watch the old videos, okay? Now everybody else is talking about the same thing. Well, maybe we are entering a bear market. Maybe there is diminishing returns. Maybe there is, the lengthening cycle is maybe not going to happen. Maybe we just go sideways for a year. Maybe we do go down a little bit. It's manipulation. It's the Fed. Don't listen to those people. Delete them. Unsubscribe. Stop following them. All they do is tell you what happened after it already happened. You can literally figure that out for yourself. The easiest way to figure out what already happened is just look at your portfolio. Say, oh, I'm down 20%. That's not good. Why didn't they warn me? Oh, because they can't tell shit. Ethereum Bitcoin ratio. This is exactly what we're talking about. We lose the support right here. We get the measure move to the downside. We break down back inside the range. This was our resistance. Should have acted as support. Failed to act as support. Now we broke down below. It's acting as resistance again. I fully expect the Bitcoin Ethereum ratio to go to 0.07. So again, when we were talking about, do we want to be in Ethereum or do we want to be in Bitcoin? What was I saying? I'm not saying sell all your crypto. But if I was going to hold Bitcoin or I was going to hold Ethereum, I would rather hold Bitcoin. And then what happened? Ethereum took a massive hit and Bitcoin sold off much less. Point taken. So total market cap on crypto. Again, bearish divergence on the entire crypto market cap. 821 have crossed the downside on the weekly. Hard sell signal coming out of the bullish control zone. All red histograms, red slope line. All these things have been telling us all this. The same thing. Bearish divergence. Everything. It's all been just laid out. Been just waiting. All we had to do is just look. And we've been talking about all of it. So now let's look at this one. Bitcoin dominance chart. What have we been talking about on the Bitcoin dominance chart? Triple bullish divergence. Okay? We have a support here. We have a resistance here in red. 1, 2, third drive of bullish divergence. Found support exactly at that 40 level as expected, as discussed, as planned, as anticipated. 1, 2, 3 drives of bullish divergence. Now I expect us to push back up to the top of the range. I expect Bitcoin to regain like that 45.5% level. Everybody else is saying, oh, the last time we saw Bitcoin dominance falling like this, it was about to capitulate. Alt markets starting. Alt markets here. To the moon. To the cum rockets. To the Doge coins. Quick, everybody. To the shit coins. No. The opposite. No. Bitcoin is about to gain value in comparison to the altcoins. I'm going to take a quick break, grab a drink, and then we'll rip into these altcoins. We'll talk about the chain link trade over the weekend, and we'll just rip into all these bad boys, and then we'll look at our stocks and commodities. Just give me like 2 seconds to grab a drink. My throat is ripping. All right, let's keep on rolling. What's up? What's going on there? Crypto Galt. Good to see you, buddy. From a not bot. So you say. I'll believe it when I see it. We all know there's nobody but bots in this channel. Now, how do I get the? I have like the worst luck in the world. All the bots like flock to this place, but none of the thoughts. Okay. I wish I could trade in every 10 bots for one thought. All right. I get all the bad, but none of the good. I'll even settle for a robot thought. It's better than just regular robots. Anyway, so let's jump into our altcoins and rip through these bad boys. So obviously we got that Chainlink play going on here. I mean, crushing it, obviously. I want to say there's still one more target to the upside on this too. Yeah, I still have a target on Chainlink up to $31. So I'm still fully expecting that to play out. We'll see about the weakness on the rest of the cryptos, but that was one I shared in the trade group. Took some profits already along the way. But overall looks good. Been in a bear market since our breakdown from support back here, and technically has confirmed back above the 200 exponential and simple. Oh man, I forgot I was on the 4-hour with this. Sorry. Let me switch back to the daily. So technically I have confirmed back above the 200 exponential and simple. But again, when we broke down right here, we lost that. We came into a descending like channel or wedge, whatever. Broke out, came back down, retested, got a perfect entry. Basically, nice little run up here. Already up like over, depending on when your entry was, what your targets were, etc. Already up between 20 and like 50%. Expecting another like potential 10 or 15% on top of this, which was just a retest of the 618, just a push up to that 618. So I do not expect Chainlink to all of a sudden go into some bull market. I do not think Chainlink will be, going to new highs anytime soon. But the 618 is that $31.19 target. So, and I will front run that. I will take profits ahead of time or let a running stop loss take me out of the trade. But we do have momentum in our favor. We're in the bullish control zone. We have the 821 cross to the upside. We're on top of the 200 exponential and simple. Chainlink looks strong. One of the few to look strong. Polkadot looks terrible. Sitting at support, just barely hanging on for now. If we break down from this level, there's literally nothing left. This was, basically, I mean, I'm on the Coinbase chart, so there's probably further history, but there's nothing here. There's like 3 days worth of price action, and then it's down at $15. What is there here? There's nothing. A couple days of just marching up, but no clear basing out, no clear support, nothing to hold us up. So, if we break down from here, arguably, maybe we should be looking at fib levels. Maybe we should just be looking at horizontal support. Maybe they're going to line up perfectly either way, so it doesn't matter. Oh, look, just so happens. Let's get rid of this blue line now because we don't need it, because it's actually just the 0.5. It's exactly the 0.5. So we can see this is trading extremely technically. From the low to the high, it's trading perfectly. Even on the way up, before we knew where the high was going to be, we see right here a clear support at the 0.5. We see clear resistance here at the 236. Again, continue to the upside, top out. We see some temporary support here at the 236. Break down, it acts as resistance. We come straight down here to the 0.5. We bounce back up. We see clear resistance at the 382. And here we are back at the 0.5. So the next rational target to the upside is another retest of the 382. Seems less likely since we just did that. Seems more likely we would see a target move to the 618. So Polkadot looking like it's going to be a teenager again. So it's got that Benjamin Button's disease. It's reverse aging. Okay, it's going to go from, and what did we sell Polkadot at? Do you guys remember? Do y'all remember? $51 or something like that was our sell target on Polkadot. I believe it was $50.50 or something like that is when we sold Polkadot, and it's now at $24.50, and we expect it to go to $20. So I mean, when it's all said and done, who cares how long this goes in the bear market for? We can, for every one we sold, we can just buy 3, and then we can just hold it forever. I mean, if we wanted to. Obviously, we're not going to do that, but building up momentum, bearish control zone, basing out at support. Maybe it has a move up here. It looks terrible to me. It looks terrible. And technically now we have just populated the 200 exponential and simple, just because this Coinbase chart's so new. But we're below both of them, and the 200 exponential is already rolled over. So, just it looks bad. Looks bad. Got to really pick and choose with these shit coins right now. You can't just throw shit at the wall and hope something sticks anymore like you can in the bull run. Uniswap, Looks bad. 200 exponential and simple have rolled over to the downside. Got a double top failure to reclaim these levels. Building a little bit of momentum here, but it looks like it's going lower. So, if the $14 mark doesn't hold, this likely goes much lower. And there's no support on the way up. We have resistance that could be support at single digits. We're talking about single digits. This was a very key level the whole way here. This just looks like a gigantic descending triangle right now. This looks so bearish. It's like ridiculous at this point in time. So, we'll see what happens. We bounced to 886 perfectly. We can basically get rid of that. We know where to look for. But at this point in time, when I look at Uniswap, I just see this. I see a big, terrible, terrible chart. A giant descending triangle that breaks the downside 66% of the time, and it typically waits till it fills out about 66 to 72% of the pattern. So it looks like we're getting close to a breakout or breakdown, and this has bias to the downside. And if we break down from here, we're talking about low price targets. So let's just go from this swing right here. I'm not going to go from like the crazy wick, whatever. That looks pretty realistic because that's our 236 is exactly where we came down to. I'm sorry, 382. So we've already confirmed that we have topped out here. We already came down to the 382. So our next target to the downside is going to be the 0.5. So we're talking about a teenager, $9 Uniswap, okay? $9. So get ready. From 44. Crypto looks so bad right now. And people are still like, we're still in a bull market. I'm buying the dip. Now's the perfect time to learn how to leverage trade. Okay. Sure it is. It must be really, really hurting for people to use your links so that you can get a cut off of them losing their money if you're pitching Bybit links right now and telling people to use a VPN. You're going to go to jail for that too. I'm not telling you to use a VPN and trade illegally on Bybit, but if you wanted to, here's a link. What? Are you seriously retarded? Like the SEC, doesn't notice you? When you have 250,000 or 500,000 people watching and following you, and you're wink, wink, telling them to do illegal things, you don't think they're going to show up? Okie dokie. This is going to be the biggest wreck city ever. Think about all the people that have traded in and out of crypto on the way up during this bull market and had multiple taxable events take place. Because let's keep in mind, if you bought, let's say, XRP at 20 cents and then it went to $1 and you sold it at $1, you now have 5x your money. So if you had $10,000 and then you went to $50,000, you have $40,000 worth of capital gains you need to pay taxes on. So assuming those are short-term capital gains and assuming you're in, let's say, just for simplicity's sake, 33% tax bracket or whatever, or let's say 25%, just to keep it easy. You have 40,000 in capital gains that's taxed, and you have to pay 25% of that. You now owe the government $10,000 on that 40,000 in gains. But then in the meantime, you lost that money now and you don't have it anymore. The government, they don't just show up and say, hey, where's that money you owe us? And you're like, oh, I lost it. And they're like, well, you still owe taxes. And they're like, well, no, I lost them. I don't have that money anymore. And they're like, yeah, sure. You still owe taxes. So, you can offset your gains with losses for sure. But as things roll over into the new year, as people realize that just because you traded crypto for an NFT, bartering still in the United States is considered to be selling, and you have realized capital gains that need to be paid when you transfer that crypto into a stable coin, into another crypto, into an NFT, into dollars, into whatever. That's a taxable event. And I'm going to tell you right now, Coinbase gave up everybody's information. Kraken gave up everybody's information. Anybody else is going to give up anybody else's information. So be ready. Be ready. Same thing with stocks too, not just cryptos. People made a ton of money on the way up, didn't sell, sold out of stuff or sold around and stuff, but didn't put aside money for capital gains. And then once the year rolls over, if you're not writing off those gains for the losses, or say you didn't realize those losses, okay? Say you bought into something and it went up, 5x, but you didn't sell it, and then you just hodled it back down. So instead of having that like $50,000 asset that you can now sell for $50,000 and then pay your $10,000, now it's back down, to where you started, but you still owe that $10,000. So you're back to having your $10,000. You owe Uncle Sam $10,000, and that's assuming, a decent tax bracket. I mean, if you're in a higher tax bracket or you're paying short-term capital gains, they're going to want more money than that. So now you have to liquidate your entire position to pay your tax bill, and you're at a loss now? People just don't understand what's about to happen. XRP still looks terrible. Bear market below 200 exponential and simple. It looks like it's getting ready to cruise on down to 51 cents. So it looks like it's about to get a 33% haircut. It's trying to hang on here though, but still looks very bearish. Looks terrible. XRP wants to do something, but it just can't. So Matic basically broke down from the pattern, tried to reclaim it. Doesn't look good. Confirmed into a bear market now. This is what we were talking about. We've nailed this Matic trade over and over again. We were paying attention to the $2.13 level, but I didn't take it. I didn't like it. I didn't like how it looked. I didn't like the weakness over the weekend. I really wanted to see the bulls show up and try to do something over the weekend and let people know that they're still around. They're still pumping on the weekends. They're still doing work. They're not dead. They're not hibernating. They're not scared. They didn't tuck their tail between their legs and go, run off. But they didn't do anything. They didn't show up. This was their big attempt. This was it. That was their, hey, we're still alive. Doesn't look good. Does not look good. BAT, basic attention token, looks weak, bearish. I mean, now officially into a bear market, breaking down from that key support level. Looks like it's headed down to like 82 cents. Cardano, the weakest of the week. Terrible. Absolutely terrible. Broke down from the 236 now. Didn't even get any pushback up here. Cardano is by far the weakest. I mean, which is not a surprise if you ever see Charles Hoskinson. I mean, he radiates weakness. He's like literally the definition of like a beta male. Terrible. Looks absolutely terrible. So keep on. What did I say here? Keep on staking your Cardano for 10% while it loses 66% of its value. Keep on staking. I made 10%, but I lost 66. Oh, man. That makes perfect sense. Sushi topped out exactly like we said, just melting down since then. Looks like it's going to continue to melt down. Again, I still think our target to downside is going to be like $5.30. HTR, Hathor, looking like a double top here pretty clearly. Still much stronger than most cryptos. It is still above its 200 exponential on simple. Still has a positive slope, but looks weak. Looks like a double top here for sure. I mean, the key level to look at is just 200 simple. If it breaks down from $1, it's going to look real bad. Probably does base out here, at least temporarily. Another big thing I want to warn you guys about, and again, this is not financial advice, but we want to look out for liquidity events, okay? What happens when markets roll over? When we start entering into a potential bear market or flipping from bullish to bearish for like a secular or cyclical market, we look for liquidity events. What do I mean by that? Okay, if you have a large position and you need to exit that large position, but you're underwater or maybe you're in profit, but you don't want to just sell it right now into weakness and just melt it down and give up a bunch of your gains or lose a bunch of extra money. What you do is you pump up the price. You pump it up. And then everybody else FOMOs into it. And then you sell into them buying. So you basically create a fake short squeeze to get the price to move up. And then you dump on everybody as they're buying into this momentum. And in the crypto space, as soon as something starts moving, everybody starts running in to that thing. They're like, oh, this is it. Chainlink. Chainlink's going. It's got the Google CEO. It's breaking out of long-term downtrend. It's the Oracle. It's the future. Everybody go, 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 go. And then what happens? A massive, immediate just sell-off. And you're like, what happened? It just went like way, way lower. How did that happen? What was it? It's a liquidity event. It's literally what you do if you're a market maker or a giant whale to create buy pressure to offset the sell pressure you're about to dump on the market. Because if you just sell into resistance, you're just going to, or support, you're going to just chew through all that support and you're going to cause, basically a massive like liquidity, like squeeze, like capitulation. So instead, you pump it up, pump it up, pump it up, start to build up momentum. Everybody FOMO was in, Chainlink is breaking out new highs, and then you just dump on their face. And that's exactly what happened at Bitcoin with 69,000. Solana at support, at the 200 exponential and simple, at support back here. I mean, this is it. This is what Solana is holding on at the $123 mark. And then after that, remember, we were in Solana at $40. And that's where we're going if this breaks down. I mean, there's a stop off at like 80. I mean, this thing's going to move in $40 movements. 120 is support, then 80, then 40, then 0. Maybe negative. We'll see. Possibly negative. I mean, not really. I mean, Solana legitimately probably does do okay, but not anytime soon. It's way overvalued. Way, way overvalued. Did I do Avalanche or did I accidentally skip over that? Did we look at Avalanche? Yeah, I feel like we did. That's our support at 80 on Avalanche too. Same thing. It was a late cycle FOMO trade. 80, then 70, then 60. All right, so MicroStrategy hit our first target here, as expected, as predicted. The 382 has been officially tagged. So after that, we're looking at this 411 target. And then after that, we're looking at the 0.5, which is the measure move from the breakdown of our triangle. So what did I say? This thing's going to be in the 400s soon. And then it's going to be in the low 400s. Then it's going to be in the 300s. And then Michael Saylor is going to disappear. He's going to fake his own death. He's going to get run off with everybody's Bitcoin. He's going to lose the keys. Something's going to happen. There's going to be some crazy event that involves Michael Saylor. Okay. And keep in mind, old Mikey has been dollar cost averaging up. So 31K is an important level to watch because obviously this is garbage. This is straight up garbage. I mean, we're down, what? $900, 800 and some change dollars off the top. We're down over 66% from MicroStrategy's high. So let's be real careful here. Old Mikey Saylor, that short squeeze, or that, not short squeeze, that margin call. Hood looks still like crap. I mean, it's trying to base out here, but let's give it a couple days. I don't trust this 13-cent swing after. I mean, remember this was a big one here. It went up to $85 and now it's at 16. It's not a bubble. Coinbase breaking down from key support. It's got a couple of stair steps on the way, but I fully expect Coinbase at 210 very soon. So another 10% down, and then I'll probably buy the double bottom potential. We'll have to wait and see, obviously, but I think 206 or something like that was my target before, and we slightly front ran it. We'll see. So Bed Bath & Beyond. Oh, big surprise. You guys hear the news on Bed Bath & Beyond? They're closing 38 stores. Turns out they're a total piece of shit company, and they're useless, and they're garbage. Do you remember what I said about Bed Bath & Beyond's balance sheet? I went and looked at the fundamentals on Bed Bath & Beyond. They're the worst fundamentals I've ever seen in my life. The debt asset ratio is garbage. Their sales is garbage. Everything is garbage. This is terrible. The only good trade on Bed Bath & Beyond that has been made in the last year was the one that we made right here. And it's straight up garbage, and it's going much, much lower. Maybe it has another short squeeze. Who cares? It's total trash. It's total garbage. This is complete garbage. How do we know this was complete garbage other than fundamentals? Well, the fact that it literally put in a high back in 2013, 2014, and it hasn't been back there since. So all this positive action on Bed Bath & Beyond didn't even take out its previous all-time high. This is a straight up garbage company, out of business. Somebody else probably swoops in and buys them up in the single digits. This can go to $5 and then somebody else is going to buy them. And then they're going to shut down all the stores and they're going to use the name for lotion or candles or whatever Bed Bath & Beyond has. Probably some kind of bed, bath, and also some Beyond works. AMC, total trash, garbage, useless, barely hanging on to support right now. Getting ready to go straight back down to single digits. Total garbage. Remember with AMC, there's no support down to $15. So if you loved it at 22, you're going to love it even more at 15, bro, because it's going to be so much cheaper. We're in deep value territory. Are we? Are we in deep value territory or are we in low price territory? So I don't see any value. GameStop, everybody's getting all hyped up on GameStop. They're NFTs. We're going to use NFTs now. We're going to make our NFTs. We're going to garbage company, straight up trash, garbage. This move right here. This is exactly what I was talking about in crypto. This is literally the definition of a liquidity event. The people that want to get out, the whales, the insiders, whoever it is, says, oh, NFTs, bro, we're going to do NFTs. And it gaps up, then pumps, and then they literally just take a dump straight on everybody's face. So if you bought the gap up right here, you know, I mean, it literally, it gapped up from 130 and gapped up to 160. So anybody that bought into this after the market opened literally just got dumped on. So it's like, oh, it's up $30. Oh, it's gapping up. It's going to the moon. NFTs, bro. And they're already down 12% immediately on that. So now they're going to want to get out of their positions because they just got psyched out. They just got squeezed. They just FOMO'd in. It's going much lower. I mean, these things are straight trash. We're at the bottom of support right here. God. There's still channels dedicated to AMC and GameStop and stuff. There's still people who believe in these. Diamond hands, I'm hodling. One day when it hits $1,000, they'll regret it. They don't know what they're missing. Like, are you fucking serious, bro? Oh my God. I feel so sorry for these stupid fucking people. Man, I gotta start being nice. I'm sorry. I really do have to start being nice. Because as people are getting like absolutely wrecked and stuff, like I'm not trying to like legitimately like hurt anybody's feelings or like push them over the edge or whatever. I understand. I mean, I saw this happen in 2000. You know, I mean, it's not like I haven't been warning everybody about it for months, but you know, I saw this all happen in 2000. I saw it happen again in 2008. I know people are really going to be feeling the pain. So, you know, I think a lot of people are going to be like, oh man, I just feel sorry for people. It sucks, dude. DraftKings looks terrible. I mean, DraftKings looks like it wants to go down to the teens, like $20, $19. It's trying to build out some support right here, but looks like it's probably going to get rejected and roll over. It might shoot up here, though. I do expect a reversion to the mean play on DraftKings. I don't know when it's going to happen, but it's probably going to be a nice, juicy play. I told you guys I never actually entered this one, but I was considering it. If it reclaims this level, I think that it's almost viable to think we could get some kind of like 25 to like 50% move, but it's got to reclaim some support. And I'd rather just buy into momentum on this, on like a push up. I do not want to like just buy into this and just hope for the bottom. So, all right. So that's our crypto and friends. Let's do we'll mix it. We'll do our, tech in a second, but I want to look at gold and silver and stuff. Oh, Crypto Galt said thought question mark. You don't know what a thought is, bro? Thought? It's like a, you know, like a non-conservative woman with her body. It's like a, you know, I don't want to say sex worker, you know, because she might be giving it away for free. She might not be working for it, but you know, it's like a promiscuous woman. Let's just say she's probably not wife material. You know, the old tater thought. So gold, XAU, you know, this is what we're talking about. This looks terrible to me. Looks like it's rolling over. You know, we still have the same pattern that we've been paying attention to. And now here we are at support of the pattern. We cannot reclaim this 200 exponential and simple. We can't hold on to it. You know, doesn't look good here. I mean, we're at our blue line support here, which each time we've broken down below it on the longer time frame. The weekly, this has held up, but on the daily, the green support has held up. So if we're looking at the daily chart right now, I want to see this green support hold. If we start to break down from that, it's going to look real bad. And this literally looks to me, it really, really looks to me. And keep in mind, I love gold and silver. I'm an investor in gold and silver. Physical. But I'm telling you, this reminds me exactly of 2011, 2012. It looks exactly the same. The signature is the same. The feeling is the same. The momentum is the same. It's like, oh, we're going parabolic. All we got to do is just cool off for a little bit, and then we're going much higher. We're flagging out. This is bullish. The measure move, we take the flagpole, and then gold's going to 33,000 or 5,000 or 10,000. There's a vested interest in all the central bankers. If you ever believe in any kind of manipulation or any central planning or anything in the whole world, there's a vested interest in everyone that is powerful and rich and in government or politics or any kind of position of power to not let gold go parabolic. Because if gold starts going parabolic, people are going to be like, oh my God, what's going on here? Fiat's collapsing. Government's collapsing. And it's going to cause a FOMO event, and there's no way they can say, no, nothing's going on here. Look the other way. Right now, they can say, look the other way. Nothing's going on here. All the gold and silver believers look like the dumbest people in existence because gold and silver have just gone sideways throughout this whole time. And everybody's like, Peter Schiff, you're dumb. You don't know nothing. All these like silverbacks, you're dumb. You guys bought at $30. It's never going to $50. You know what? I'm not saying that they shouldn't be right, but the fact of the matter is they aren't. So, you know what? Sorry about your luck, guys. You got the right idea, but the wrong time. And you know what they say? If you're early, but you're right, you're still wrong. And if you're late, but you're right, you're still wrong. You got to time it. And you're not going to time it with something like gold and silver. You're just not going to do it. Silver looks terrible. Bear market. We got the reversion to the mean retest, and we're breaking down from support. I think silver's going back to the teens. I mean, I hate to say it, but I think silver's going back to the teens. So am I going to go out and just sell my physical silver? No, but I'm going to hedge my silver position. You just have to know when to chalk it up. You know, or at least when to buy the dip. Not the dip, but the dip. The dip. Gold-silver ratio, as we've been discussing, we have reclaimed the 200 exponential. We have flipped the 200 exponential on simple, both blue. We're going to come back up here to the ratio at 82. Again, it looks right now like gold is about to go parabolic compared to silver. So the last time that happened was back in 2011. We went into a bear market after the capitulation of gold-silver ratio, you know, and it went down super, super low right here when silver basically went to 30. And then here we reclaimed those levels, got back on top, flipped the 200 exponential and simple over, and then we literally went from when we technically confirmed this bull market was in 2014. It was at 80 to 1, and then that was our blow off top at 130 to 1. So it basically not quite doubled, but it went up like 75%. So your gold was worth 75% compared to your silver that you owned at the same time. So if you owned 1 ounce of gold and 1 ounce of silver at the end of this period, at the end of this like 6 or 7 year period, your 1 ounce of gold now was worth 1.75 times in comparison to your 1 ounce of silver. Like the gains. That was a terrible way to describe it. Just ignore everything I'm saying. You know what I'm saying probably, but however I described it, ignore that because it didn't make any sense. My point being is that the amount of gold that you get if you traded your silver for gold, or the amount of silver you get if you traded your gold for silver, is what we're paying attention to on this chart. And what it tells me is that if I'm going to be periodically just buying gold or silver, I want to be buying gold because I'm buying into the momentum of gold going up in relation to silver. Because if I buy, let's say, 80? If I bought 80 ounces of silver right now, or 1 ounce of gold, because that's the ratio, if we continue to go up the way that we're going up, if this continues to go bullish here, you know, maybe 6 months from now, I could have got 93 ounces of silver instead of 80. Or I could have got, you know, etc. You get my point. And that might mean that gold's price is only $1,500 and silver's price is $17. It does not mean they're going up. It just means you can get, your gold is retaining its value or going up in value in relation to silver. Platinum looks terrible. And I'm telling you right now, the technicals look terrible on platinum, but the fundamentals are terrible on platinum too. I don't know what's going to happen with platinum into the future. People are saying it's undervalued. It's a great investment. I don't like how the chart looks. I don't like the uncertainty with, you know, automobiles. The primary use for platinum is in catalytic converters. They've been using, oh my gosh. Oh my God. Why can't I think of the name of it? Palladium instead of platinum And they're not going to just all of a sudden switch back over to platinum if auto markets are slow because we're in some recession or depression, or like, autos are like super down. It's just not going to happen. So I don't expect them to retool their machinery to capitalize on the lower prices in platinum in comparison to palladium if the demand is down. They're not going to spend a bunch of extra money to save money, if that makes sense. And that's the main use for platinum. So it's just not a good time to speculate on platinum, in my opinion. I would rather speculate on one of the monetary metals, either gold or silver. And we know, obviously, that gold looks better than silver. So, therefore, if I'm going to buy one of the precious metals, I'm going to buy gold. Copper, sure, you can speculate on it, but I already had a ridiculous run up. It's consolidating here. Still looks okay, but I really think we're going to see some downside. But honestly, I look at any downside on copper as probably an opportunity. It's just a matter of when that opportunity is going to go. Long term, though, I think copper is an excellent investment because the world is going to need copper. But does that mean it's not going to go down for the next 1, 3, 5 years? It really doesn't. It really doesn't. People are like, there's a deficit. There's a deficit in silver. There's a deficit in copper. Sure, there can be a deficit, but there's still a ton of supply that's already like mined. So if there's a deficit of, 1 million ounces, but there's 3 million ounces worth of supply just sitting around, well, that's 3 years worth of supply that can account for the deficit before there's actually like a squeeze. And that's what we have to pay attention to. Same with uranium. So lithium, we're down here at our target. I'm still not just like FOMOing into lithium right here. Again, we got to be real careful because the trends we're seeing in China right now, they are literally like, China is a top consumer of like consumer of like the world's supply of like copper and a lot of these other, industrial like metals and supplies and stuff. And we're seeing their supply their intake is down substantially. So if they're 25% of the world's demand, and then all of a sudden their demand falls by 50%, that's a massive amount of the world's demand that goes down. And that can cause some serious headwinds on some of these commodities after they've already had like parabolic runs. So we got to be real careful. Again, I like all these EV plays. I like all these like, metals, but not right now. Hydrogen, again, new lows, just capitulating. Looks terrible. Probably goes much lower. Again, I love hydrogen in the future. I love the fuel cell idea. I love, where it probably goes eventually. And like all these, green energy plays and the plug powers and Tesla and all. I think they're great, but not right now. Not right now. LBS1, lumber futures. Again, I think this is pure speculation. We'll wait and see. Normally, like historically, this time of year is slow. We would see like a pullback, and this thing is just going up. So is it just a bearish downtrend, and this is the bullish retracement? Maybe it goes to 786. It's possible. We got to be real careful with this. This feels like just full on speculation, because if the housing market's about to cool off, the consumer demand for lumber for like remodeling their homes and building decks and new starts goes down, and where's all this lumber going to go at these prices? Who's going to pay for it? Who's going to want it? I don't know. This thing's going to be like the short of the century a second time in a 1 year period. USAS looks terrible. Looks absolutely terrible. These pot stocks looking terrible. $6.40 for Tilray. These things probably go much lower. Much lower. And Tilray and ACB, Aurora, and Hexo are in the words of Kathy Wood, they're in deep value territory. And not just because they've sold off by massive amounts, but because like their asset to book ratio right now is like fractions. It means that literally if they took everything on their balance sheet, sold it off, paid their debts, they literally have money left over. So they're basically undervalued at this point in time. So fundamentally, these things are starting to look real good. They already look pretty good at like 33 and 50% discounts. Hexo is at like a 66% discount. And these things are cheap right now. So if these valuations get too low, somebody comes in and just buys them up. And that's when we see these things just double overnight. So, I'm starting to dabble a little bit just with small incremental entries onto some of these things. But I mean, they look terrible. The charts look terrible. CGC terrible, broke down from that key support level. This is our giant, Eve atom topping pattern. And to tell you the truth, I mean, this thing looks like it goes to $5. I mean, just absolutely terrible. So uranium stocks had a nice little bounce, but here they are right back at the moving averages. I really think these come back down on the longer time frames. Go to our weekly chart. I really think there's potential they come down here and retest 200 exponential and simple. I would not be surprised to see URA back at like 18, maybe $15. They look bad. They look good. They look super bullish on the weekly, but short term they look bearish for sure. UEC, all these charts basically look the same, but same thing. I expect this to go much lower. URNM, again, I expect it to go much lower. All these charts look exactly the same. I think this probably comes down to like 56, 57, something like that. And then Cameco, same thing. I mean, we're talking about a move back down to like $15, $13, something like that. Now, again, I think these are great buying opportunities, but, Sprott came in and bought up all this uranium, a bunch of money flowed into it. There's this like green energy push. Everybody's like all of a sudden bullish on uranium. It's like, oh, there's a deficit. Well, there's been a deficit for like 30 years, okay? And there's still above ground supply. There's still a bunch of uranium sitting around, even though we've been mining less than we've been consuming. There was so much already mined just sitting around for the last 30 years that the deficit didn't matter. So we're not just going to run out tomorrow. It blows my mind. These people are just so fucking moronic. That's how you know we're in like literally probably the biggest bubble in history. Or there was the biggest bubble in history. It's clearly already popping. Caterpillar, nice run up here. That was a surprising move. I did not think we were going to get that powerful move back up. We'll see what happens here. Maybe it keeps running. Maybe it comes all the way back up to highs. If we were going to top out here, I would think it would be at a key fib level, which is where we're at right now. So I'd be looking at either 205 or 245. But I don't see any value here to buy or sell necessarily. I mean, if I was in a position, maybe I would be looking to get out of it. But the only positions I have on the Caterpillar and Deere right now are like long-term investments that I'm not like trading in and out of. I closed these positions already, so like trading positions. Deere, technically breaking out to the upside. I mean, arguably it should probably be something a little bit more like that off the 200 exponential and simple. But again, I mean, I don't like this rejection candle. These don't look good to me. They really don't. It looked like a bunch of people ran to safety all at the same time because like growth was getting destroyed. AM looks okay. It's bouncing 200 exponential and simple. Got to be careful at these levels. Man, like nothing looks good to me. Cemex rejected off the 200 exponential. Looks like it's rolling over, trying to find temporary support. This trade probably does play out. I think this finishes out at like 740. But you know what? When we get back to 740, I'm going to close my position and I'm going to get rid of the rest that I still have of this. Because I think it's going to get... I think it's just going to roll over. I mean, it's in a bear market confirmed at this point in time. I don't want to get greedy and hold this and just give back everything, when it drops to like $5 or $3 or something like that. Because I got in at like $3. I would be a fool to just ride this thing straight back down to like 360 and go from up over, I mean, I took profits obviously along the way, but from like 200% up to like 20% up, I would be an absolute fool. Ford is just absolutely crushing. I mean, I don't even know what to say at this point in time. God, I don't even want to agree with Kathy on this one, but this was like based on Ford talking about they're going to double their production of EV vehicles and they're going to go from 1% to 2%. And Ford goes up by 20%. You got to love it. I mean, this made me think about trimming Ford again. I'm like, I can't even, this thing goes up so much, I constantly have to trim it. I can't even rebalance quarterly. I have to do it daily. It's fucking Ford. Calm down. GM, really looking like a triple top here. I don't know. Maybe it keeps ripping. So Hasbro finally taking out that 100 level up here, retesting the highs. I mean, this thing looks like it wants to run, but God, am I just that bearish on everything right now? Man, I just hear myself and it just, wow, works. Oh, looks like trash. Maybe does get this little pop up here. I still haven't entered this one. I've been thinking about it, but I don't know. I mean, it's right at the potential entry. Just stuff like this, it's been getting beat down. Like, sure, it's in, according to Kathy, it's in deep value territory since 2017. You know, it's down like 90 something percent. But that doesn't mean it can't go down another 90%, down 98%. Now that's deep value territory. So any is at our target now. Again, this is the area we were looking at, paying attention to. I mean, we got out on this pump back here. So, I mean, $3 looks pretty juicy. If this starts to pick up momentum, I am going to go ahead and take this entry, I think. I've been saying I was getting ready to take it for a while. I really want to see it at the bottom of this channel. I want to see, like, not to be like a stickler, but I want to see like 10% more come out of this thing. So maybe I'll take a small position tomorrow. Small position. And then I'll add to it if we start to grind out a bottom right here. Because this is some key support. We have a fib level. We have the red resistance turn support. We have the support blue of the channel. We have the potential target for the inverted head and shoulders. And the risk reward on this thing is just juicy. But again, you know, it's at 280 right now. And remember, it was at 32 cents not that long ago. So it's up 10x. And remember, it used to be MicroStrategy valuation. $2,200. And this thing is at $2.80. So it lost 99% of its value. So it's close to zero. So we got to be real responsible with our entries, with our stop losses, our take profits. You know, we got to be realistic here. It's not the time to try to like throw Hail Mary passes, in my opinion. It's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Oh my gosh, only one bot? Are you serious? This channel is going downhill. We used to get so many bots. Last stream we had like 10 bots. This stream we get like 3. Pathetic. Yeah, honkiness is like an internet cam girl, or like a Twitch streamer, or like a OnlyFans, like, or just, you know, an old school prostitute. Yeah, oh yeah, I do consider pot stocks a long-term investment. That's when I say I'm dabbling in pot stocks. That's what I mean. I'm just nibbling around a little bit. I'm by no means trying to like pick the bottom on them. I'm taking small positions, you know, and we already did pretty freaking good on some of the scalps in some of these pot stocks. So we're playing with the market's money, but I mean, I look at them as, you know, 5 to 10 year plays, because I really think 2022 coming around midterms, the Dems have already been talking about legalizing pot federally. The Republicans are going to start saying it too. They're going to try to get young voters to come out, and key demographics, you know, which is like, I'm not even going to say it, but you know what I'm talking about. They're going to try to get the key demographics to come out, you know, which is just racist in my opinion to begin with. But something like, I think 75% of people like that they asked about, you know, should they legalize it, was like, yeah, sure. Now, does that mean it's actually going to get legalized anytime soon? Maybe, probably not though. Probably not. It's probably going to be another 5 years. So that's why I think these Canadian pot stocks will do extremely well, because they'll run up on the talks of legalization, but there's no competition because nobody can invest in American pot stocks, because until it's federally legalized, they can't list them on, you know, United States stock exchanges. So you can only get exposure through, you know, Canadian and foreign stocks. So I think the talk of legalizing pot in the United States federally is going to cause the boom and probably the bottom in Canadian pot stocks or the pot stock sector. And then we see them start to run up. But then I think legalization is still like 3-5+ years federally, like down the line. So, and I want to say something like 1/3 or maybe 1/2 of the United States now, like statewide, is either legalized or decriminalized. So it's on the way. It's inevitable. I mean, alcohol was illegal, you know, less than 100 years ago, and cocaine and pot were legal. So it's not unrealistic to think that pot could be legal once again. I mean, if you live in California, anything's legal. You can literally do whatever you want. So while they're like the full-on degens, you know, and I live in the Bible Belt, so we're like the opposite, you know, there's definitely a middle ground somewhere in between. Might take a little while to get there, but I definitely look at them as value plays, investments. And that's what I say. I don't normally, I typically do technical analysis on this channel, almost exclusively on like the streams and stuff. But I 100% am a value investor. If you've never read, you know, Benjamin Graham, Intelligent Investor, that is probably the best book you could ever read if you're interested in fundamental analysis and value investing. And if you don't know who Benjamin Graham is, he's basically Warren Buffett's mentor. He's the guy who Warren Buffett learned everything from. So every quote, every intelligent investment, everything you've ever heard Warren Buffett say, he got from Benjamin Graham. So if there's one book you're going to read about value investing, about investments, about understanding things. Now, granted, this book is dated. Okay. You know, it's this dude was like an investor in like the early 1900s, you know, I mean, throughout his life, obviously, in not maybe like mid 1900s, whatever, to like late 1900s. But, you know, there's like revisions to it and everything, you know, but it's an excellent book. But it's like, I want to say it's like 700 pages. I mean, it's literally like the Bible of investing. It's like the foundation that you build like all further like knowledge on top of. But not trading. It's not about trading. It's literally about, you know, determining valuations. It explains to you like everything you need to know about like actual companies and like, you know, how, like just principles for investing. And when you look at fundamentals, you look at the fundamentals on pot stocks. That's why I like Hexo. That's why I like ACB, Aurora. That's why I like not so much Canopy. I mean, I don't dislike Canopy, but like what was the other one? Tilray. Because if you look at the book to, okay, if you take, to calculate the book value, you basically just take all the assets, subtract out the liabilities. So if you have $100,000 in assets and you have $10,000, let's say $50,000 in liabilities, you take all your assets, you sell them for $100,000, you pay off all your liabilities, you have $50,000 left. And then you divide that number by the total number of shares outstanding, and then you get like the actual value of the stock per the book value. So then if you take the actual value, what the market is giving it, so do you take the market cap, which is just the price multiplied by the common shares outstanding. If there's a discrepancy between those two numbers, it means the market is underpricing that stock. So it's in value territory. So right now what's happening in, I haven't looked for a couple weeks specifically, but what's happening in Tilray and Aurora Cannabis is they're trading, the market has them valued under their actual book values by like, it's like 33+%. And on Hexo, it's like over 60%. So the market is basically like the way you see a blow off top to the upside where everything gets way overvalued. We see a capitulation to the downside where everything is undervalued. Because the truth is, if they literally just said, you know what, fuck it, we're going to close this company down tomorrow. And they literally just took everything they own, their buildings, their machinery, their farms, their land, just everything. And they just said, F it, we're just going to sell this off. They take all that, they sell it, and then you want to leave like, you know, roughly like a 10 to 20% margin, you know, assuming for like losses or like not 100% accurate valuations on their assets, etc. But typically the assets are overvalued because they're trying to write them down for like depreciation or whatever. But essentially you take all that, you sell it off at a reasonable price, and then you take all the money, you pay off all your liabilities, and then you take all the money and basically, you know, divided it up. And when it's all said and done, there's more money left than there is valuation on the company. So if the market's saying the company's only worth $100,000, but you took all the assets, you pay down all the liabilities, and there's still $200,000 left, like there's an extra $100,000 there. There's clearly an extra $100,000 in valuation that the market is not giving it. And that's what's happening right now in these pot stocks. They've been beat down for so long that the market is like undervaluing them. And that is the best time to invest in something. Now, is it always going to work? No. Is it possible they get delisted and go way lower? It is definitely possible. But typically, that won't happen on a company that has a positive asset to book ratio, that's trading at a discount, that has positive earnings. Now, if you were like losing money every year and you're non-profitable and you have over 100% asset to liabilities, or you get in trouble with like the SEC for like some shady practice or something, you're much more likely to get delisted. But if you're a profitable company, if you're trading at a discount, you're probably not going to get delisted. There's no reason to delist you. More likely what happens is, especially when you're trading like under $10, like I'll never short a stock under $10, because what happens is what happens with GameStop. All of a sudden, people come in and realize it's undervalued and then buy it up, and then it shoots way overvalued because it gains a bunch of momentum. So it's like a massive short squeeze. Or alternatively, another company comes in and says, hey, look, you're trading at a 50% discount to like your book value. So we'll make up half the difference for you. The market says you're worth $1 billion. Your book value is $2 billion. We'll give you 1.5 billion and we'll take over. It's basically just a M&A. And that tends to happen as well. And what happens is all of a sudden the stock gets revalued at, that 50% higher or more usually. So again, you see something that's $10 shoot up to $15 overnight, or maybe $17 or something like that. So yeah, they're, in the words of Kathy, they're in deep value territory. Of course, when she says that, she's talking about companies that don't make money. I'm talking about actual legitimate companies. So, but yeah, that was probably like longer of a description than you needed, but I do like talking about fundamentals sometimes, since all I normally talk about is technicals with a little dab of fundamentals in there. So DXY looks strong short term, showing a little bit of weakness. Not surprising. This thing really doesn't want to break down, but that was a pretty powerful candle. We'll see what happens. The rates on DXY have been trading pretty much in lockstep, but I wouldn't be surprised to see a little more weakness in DXY, see it come down to like that 95 range, but still massively, massively bullish on this. This looks like a bullish reset to me though. I would not be surprised to see the DXY just start going nuts here. This is still just so bullish to me. So let's rip through these guys. I kind of want to cut it short tonight. Oh, we're already at 2 hours. Never mind. I'm going to cut it short tonight and only go for 3 hours instead of 3.5. So Tesla looking like a big time double top. I'm sure Elon's going to start selling some more into these markets. I fully expect this to go back down to 900. Probably by March, it's in like the $800 range. We're seeing some clear bearish divergence between the indicator oscillators. Looks tired. Tesla's done for a while, in my opinion. Lift looks terrible. Broke down, retested resistance. We have a clear support line right here, and now it's acting as resistance. This looks like it's going much lower. I mean, clearly in a bear market, looks like it's going much lower. Uber. Same thing. I mean, it retested that green support as resistance, and it was also the top of the channel. We took profits on the trade, and now it looks like it's going much lower. Probably at least coming back down to $35. Probably goes to our target at $30. So Discovery obviously just exploded to the upside. We freaking dominated that one. I took some profits off the table already on this. I don't want to get greedy with it by any means, but I mean, just right now, it's up 27%. So, I mean, if there was ever somebody that picks winners on a regular basis, like a couple days before it happens, with the occasional, like, EDU situation, I'd say it's this channel right here. I mean, I've nailed so many of these things like a couple days before they just explode. But yeah, I mean, I'm not like, this is not an investment to me. This looks super toppy. The knife is like through the roof right now. It's trying to reclaim 200 exponential and simple. That was a fast short squeeze move right there. Yeah. Same thing with Viacom. Again, nailed it on these. Viacom's up, I think, about 20% already. I keep clicking the wrong button. My bad. Yeah, 17%. I'm not going to get greedy on this, but I do expect it to get to the 200 exponential and simple. But again, I mean, the knife is like through the roof on these. Does not mean it can't go higher, but every time we see the knife peeking out like that, that's the absolute top right there. Even here, we don't get like an aggressive knife, but, that's basically the top. So here we have the knife at like those same levels above the 100 level. So we probably do top out here. Realistically, though, the knife, like 50% of the time, the knife is the absolute top. The other 50% of the time, it comes down, puts in a lower high, and we get divergence. And keep in mind, I was talking about this actually with some of the newer group members who aren't as experienced with the knife. Now that I have released the new version of this, and I was basically talking about how, there's very few actual leading indicators. Most indicators are lagging indicators, and the knife is one of the few leading indicators. So it's actually predictive in the sense that it tells you about the move before it happens. So here with this peak right here, that's that move right there. And then we see it actually push up and puts in divergence right here. And that's the peak right there. And that's the absolute peak. So it gives us the divergence signal here. Here again, we see a peak and then we see a lower high. Well, that's a little measly sell off, but at least it's still there. And then this one, we see the peak is actually the top. So whatever we see right here, if we see this come up and put in a lower high on the knife, it's probably going to be the remainder of the move. And that's probably going to be the top. Going into earnings too, coming up on a lot of these things. So not specifically Viacom, but like banks and all. We're going into earnings season, so we're going to see some crazy shifts in volatility. So Pinterest looks terrible. I mean, this thing is going down. I mean, it looks like it's about to go into free fall. Look at this right here too. People are like, not all gaps get filled. No, gaps don't have to get filled. This gap never got filled. Well, sure, you're right. It did not get filled. This gap right here from $25 never got filled. It never got filled. And here we are, 527 days later. And what are we about to do? We're about to fill that fucking gap. So expect Pinterest to come down to $25 from 32. So see you at 25, Pinterest. God, this thing. Bear market, total crap. Snapchat just getting racked up in this bitch. Again, same thing. We have a gap back here from when Snapchat bumped up from 29 to 35. And now here we are. It looks like we're about to fill this gap. So the Snapchat going to $28? Probably is. We're seeing some bullish divergence, though. It's trying to bottom out here. I don't know if it does. What's up, CW? Good to see you, my man. Don't forget to like and subscribe, ladies. And by ladies, he means gentlemen and bots. Because that's the only people who show up here. Okay, so Peloton. Is this still at $35? I thought it'd be at zero by now. Looks terrible. Probably does bounce. I mean, no, I'm not even. No, probably goes to zero. Airbnb. I mean, it's at key resistance underneath the moving averages. We might not even look at tech anymore. We'll just assume that all these go to zero until something changes. Zillow looks terrible. I mean, that was like a little dead cat bounce, and now it's just rolling back over. So, I mean, this thing's just getting crushed. It's getting creamed. So we're gonna hit the 618 target, and then I'm gonna take a position on this because I'm salty. I missed about like $1 before. So at $49, I'm gonna get into Zillow, unless it just like massively capitulates to 33, and then I'll get in there instead. But probably 49. Wish almost at zero. I think I still have some of this left too. God, this is terrible. Bumble new lows, going much, much lower. Looks absolutely terrible. I'm not catching knives on any of these things with potential rate hikes coming arguably rate hikes coming, whatever. We'll see. It just seems like a reckless time to try to pick bottoms with so many headwinds. Alibaba looks terrible. I mean, it had a nice little push up here, trying to cross 821 back to the upside, but I mean, Maybe comes back up here and fills this gap. Again, I'm just not trying to get, I'm not trying to, yeah. I'm going to look for like short-term scalps on stuff, but I'm not looking to like pick bottoms on these things, especially anything tech or China related. So if it's like Chinese tech, I'm really not trying to like pick bottoms on it. 10 cent looks like trash. BZ, I just have no interest in. Matter of fact, I'm probably going to take that one off the list. This hasn't done anything. JD finally hit our target to the downside. Found support at the 62.40 level. If I was going to do something China, we are getting the divergence signal on the jewel thief. Maybe this would be it. But again, bear market. I mean, and it's China. Like, this does not look good to me. Neo, bear market. Looks like it's going much lower. New cycle low right here. So definitely not good. On a scale of 1 to good, it's definitely not good. NVIDIA, you know, this is do or die zone right here at support. If it breaks down from here, I think it hits our target. So 228 looks likely. You know, remember, transportation, yield curve inversion, semiconductors. These are all key things that we're paying attention to. And then energy. If we see the energy spike, if energy starts putting in a new high and we start seeing weakness on semiconductors, weakness on transportation, and then we see like the yield curve inverting on like the middle terms, because we're already inverted on the long end of the curve. That's basically like, okay, this is it. This is it. Like recession, depression coming. So a big energy spike is basically like the nail in the coffin, in my opinion. And when I say spike, I mean like to the upside. If we see oil take out its local high, if we see energy bursting to the upside, like just, you know, 5, 10, 15, 20% moves, we're probably at like the end of like a cyclical bull market. Or like secular bull market, I should say. AMD, again, double topping right here. If we break down from this level, you know, we have the yellow levels highlighted and the 200 exponential and simple. It looks very weak. So Intel, you know, had that little burst to the upside, trying to revert this. It looks terrible. People are trying to buy this up, saying it's beat down. It's a good value. It's due to move because it didn't move and all the rest of the semis did. It doesn't work like that, okay? I'm not betting on the three-legged horse to win the race after it just got lapped twice in the strongest bull market in existence. No, thank you. Taiwan semi, again, this is our throw over, our failed breakout, exactly as we discussed. Right back down, back inside the zone again. You know, even if this thing was going to start breaking out, you know, Xi would just send a couple planes over and, you know, be on the news and then back down, back into your bots. SMH, VanEck Semiconductor ETF, again, target down here to like 280. Maybe this area holds at 300, but probably not. As like the two big, I mean, the big names are like what? AMD, NVIDIA, Micron, like, and you know, their charts all look the same. ARKK, okay, so I don't know who saw Kathy's most recent ARK in the know, but oh my God. Oh man. Oh, sweet Kathy. Oh, sweet Kathy. God, should I even rant about Kathy today? No, I'm skipping it. I'm not doing it. Let's just say that she's doubling down on her dumbassery. So, and then you like read the comments, and if that's not a cult, I don't know what is. Maybe they just block anybody that says anything mean. I don't know. I should write something and see if they block me. But if I have ever read a culty, the most culty comment section I've ever seen in my life is ARK. Kathy, you're so smart. You're such an innovator and leader, and you clearly articulate better than anyone your views. That's why you're so strong. You come out here and just let us know that it's okay that you're losing all our money and completely underperforming the ETFs and general indexes, and you're literally the worst investor, but we love you and we believe in you. God, it's full on a cult, 100% a cult. And you know what she said in her recent video too? She literally had the audacity to say, tech is not in a bubble. Tech is not the bubble. I told you guys tech was not in the bubble. Most of our stocks are down 50, even 75%. That is not a bubble. Bitch, that's a bubble that popped. She was saying she wasn't in a bubble on CNBC 7 months ago when I was talking about her being on her knees with record outflows, writing songs about how shitty she is and how she was going to get absolutely wrecked. And she's sitting here saying, this isn't a bubble. You want to know how I know it's not a bubble? Because if it was in a bubble, I would be getting praised for what I'm doing. And I'm not. I'm getting criticized. You had billions of dollars worth of inflows into your funds from stupid ass mom and pop investors. That's not getting praised. That's not a bubble. You're down 75, some even 50 and 75%, and that's not a bubble. We're not in a bubble. The bubble is in companies that actually make money, and like Ford and profitable companies. Those are the bubble. We're not the bubble. They're the bubble. We're down 75%. That's not a bubble. You're a bubble. She was literally begging people to believe in her. She's like, this time's different. Trust me, guys. Just don't bail. We can do it together. We're a team. She literally said, my retirement is in this. I'm here with you guys. I'm doing it too. She's making a percentage off the top on billions of dollars. And she's losing her own percentage while she loses everybody else's money. Elizabeth Holmes and Cathie Wood are going to go down as the two biggest scammers of all time. The 2021/2, the year of the women taking all the money. Oh, God. It's not a bubble. You're in a bubble. It's not a bubble. Lemonade, Teladoc, terrible. Planeteer, new low. Probably goes to 786, 1250 on Palantir, sorry. Unity broke down below 200 exponential and simple. Looks bad. Corsair Gaming, terrible. Still just capitulating. There's nothing left here. Corsair goes to teens. $19 after that. Below IPO price. I mean, this is crazy. This is a company that makes stuff. We wouldn't even be having this stream right now if Corsair didn't exist. Because my computer is made by Corsair. Not all of it, but some of it. And they make good stuff too. They have actual good stuff. So do not conflate the value of a company and the value of a stock. Because it's a good company. They make good products. Does not mean it's a good stock. Does not mean it's a good price. PayPal looks terrible. It looks like it's ready to just let go. And look back here. Who's this little guy? The little gap on PayPal back in $126. Get ready. Get ready, PayPal, for another 33% drop. PayPal about to lose $60. Get ready. God, that's so far down here. I mean, it does price stair step. It's got a little way to go. It's not going to do it tomorrow, but I mean, giant Adam and Eve pattern. And I mean, this measure move doesn't even work, but where does that take us to? Oh, it's to the gap fill. Ladies and gentlemen, Adam and Eve are going to eat the apple and fill the gapple. Hello. McFly. Square looks terrible. It's on its way straight to zero. Oh, no, wait. To 100. That's a 100. That's not a zero. Going to 100. Looks terrible. Ooh, we almost made it, guys. Bear with me here. Twitter looks terrible. People were like, Twitter's getting absolutely crushed. They lost 5% the other day. I'm like, what? This is like the least bad day that Twitter's had in a while. They're down 50% off their highs and clearly in a bear market. Like, Twitter is garbage. They're in a bear market on users, too. People can't get away from Twitter fast enough. So they're like, oh, maybe this censorship thing was not a good idea. eBay looking bad now here, too. I mean, it's been strong for a while, but it looks rough. This looks real toppy to me. It looks like we're basically out to get rejected and roll over. I do not like eBay here. Full disclosure, though. I know I'm hyping it up and making it sound really good. I do own some eBay that I'm not planning on just like dumping here. But like swing trade scalp wise, no thank you on eBay. Amazon looks like we're gonna probably get my target here. So we'll see 31.82, but I'm really paying attention to Amazon at like 28.66. I know I've been saying that forever. We've been waiting and waiting and waiting and waiting, but I think soon we get there. And I will be buying this because I do think it will stay range bound. Does it have to? Could it just break through here and go to $12? It's possible. Probably not though. Maybe 2,400. But I mean, I'm looking to buy this thing. You know, it's a blue chip to me. So, and I think we're about to get a nice deal on it. Apple still looks real strong. Still looks real strong. Starting to show a little weakness here, but still looks real strong. We want to see 167 hold. If not, maybe 157. We hit 3 trillion market cap though. We almost made it to $200. Apple's done. That was it. Target hit. I have no interest in Apple anymore now that it's worth $3 trillion. That was our goal. We made it to the goal. Everybody golf claps. And then, okay, that was fun. On to the next. Facebook looks terrible. Looks terrible. Couldn't even get up to 786. Just double topped at the 618. I think it's coming down here. Put in a new low. At least sweep the lows. We'll pay attention to 236. 317. After that, 300. This is borderline. Like so close to a bear market. Everything is almost in a bear market or in a bear market. Everything. Cryptos, stocks, everything. We're even having our first index, the old Ruddy, the Russell, is about to flip into a bear market. So, you know, Wall Street, 20% down, it's a bear market. That's fine. Do whatever you want. I use an actual real way to determine a bear market, and like everything looks like it's in a bear market. Just about. Google's still strong though. Obviously love their platform. They're good. They're great. They're grand. I love you, Google. You're the best, Google. You're the best. Probably goes to 26.63 though. Google McDougal, still very strong though in comparison. Microsoft, again, same thing. You know, just headed down to our target, 305. Am I buying Microsoft at 305? Am I buying Google at 26.63? Probably not, honestly. There's not a lot of stuff that looks juicy to me right now. In my opinion, the best thing to do right now is, you know, and this is for me, not for you guys, because it's obviously not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. My opinion is just hunker down. So what if inflation is 6%? Go ahead. Take my little 6% per year. I don't plan on sitting on cash for a year. But what I do plan on doing is getting things at cheaper than 6% off. Because if I'm right and we go into a bear market, a recession, a depression, multiple compression, you know, GDP, like stagflation, deflation, whatever you want to call it. I mean, the 6% that we lose on cash from inflation, if it even stays 6% a year from now, is going to be nothing compared to the discount that we're able to purchase these assets at. 30%, 50%, 75%, 90% off from right now is what I'm expecting. DocuSign, obviously this has gone to zero. Or no, it's the 135. So probably $90. I mean, all these charts look so bad, guys. So bad. So I did say I was going to talk about a couple things, crypto related. I do want to just mention, okay, as far as Bitcoin mining, you know, everybody's like bullish on Bitcoin mining. We talked a little bit about like Kazakhstan basically going to war here. A bunch of like Chinese miners went to Kazakhstan, started mining in Kazakhstan. Prices on energy went up. There's obviously like, you know, riots in the streets. The people are like overthrowing the government. The government has stepped down. Now there's like, you know, essentially like just craziness going on over there. My name is Borat. I think he was from Kazakhstan. I'll have to contact him and see if he can give me any insider information. That movie's fucking hilarious. Definitely controversial, but funny. Not good. So we're seeing Kazakhstan in real time play out like a hyper, like super cycle of what I expect to play out in cryptocurrencies. We have okay, now look, I'm not saying it's crypto's fault for using up a bunch of energy. I'm not saying it's their fault. It's actually like fiscal, like government's fault, like for wanting clean energy and renewable energy and like hippie bullshit that's not possible yet. I'm not saying that I don't believe in that stuff, but we have to wait until we have it before we start turning off what we have now that works. Because we need energy. Energy is life. Energy is growth. Energy is creation. We don't just say, hey, the sun is not good because it's giving people cancer. Let's blow up the sun. Let's shoot a nuclear warhead at the sun and turn it off so nobody gets cancer. And then everybody gets together and goes, that's a good idea. Cancer's bad and it kills people. And the sun is mean. We got to shut it off. Fuck you, sun. And then we launch nuclear warheads at the sun. And then we blow it up. And then we're like, oh no, now we don't have any energy. Oh, that was a bad idea. Oh, now we're all going to die. That's like what we're doing right now. That's what we're doing right now. Not by launching nuclear warheads at the sun, but by basically saying we don't need oil anymore. We don't want this dirty fuel. We want clean energy. We want green energy. We're turning off the energy spigot before we replace it with something else. It doesn't make any sense. So energy prices going up. Meanwhile, Bitcoin and proof of work takes massive amounts of energy to, no offense, but generate nothing. It doesn't generate anything. It secures the network. It literally, all it does is it secures the network. So we're spending a ton of money and a ton of energy in the middle of a global energy shortage to generate nothing. We're not generating new Bitcoins. The Bitcoins are the reward for securing the network. So we're securing the network. If people turn off all their miners tomorrow and the hash power cuts down by 50%, you know how many Bitcoins still get generated after it readjusts and everything? The same amount. The same amount. The Bitcoin network automatically adjusts based on how many people are mining. Well, not people, but the hash power. And then it still mines blocks every 10 minutes. And then you know what? If more people shut off their miners, it readjusts again. And then it takes 10 minutes again to mine every block. And then you know what? It's so smart. It just keeps doing that until it balances out. So we don't need extra hash power to secure the network to generate the Bitcoins. We're not creating value. We're literally just destroying energy and over-securing something that doesn't need over-secured. So it's the argument that Bitcoin is a store of energy and that we're building these Bitcoins, we're mining these Bitcoins and then storing the energy in the form of money that we can later re-release later. That's not how it works. This isn't energy that's stored up in a battery that we can release later. It's literally just money. It's digital fiat. I love crypto, but no. This agenda, this whole push, this everything, no. There's so many headwinds. There's literally more headwinds for crypto now than there has ever been. And then the second thing I want to talk about is all the people that are doing on-chain analysis. Okay, there was a time when on-chain analysis was good. There was a time when crypto and Bitcoin and all these things were decentralized and it was good. But now we have exchanges with massive amounts of cryptocurrency and transactions going on through the exchanges. So let's think about this. We're going to do on-chain analysis and we're going to see all the stuff that takes place on the chain. Okay. So what is that? That's peer-to-peer transactions taking place. That's great. We can see all the peer-to-peer transactions. Awesome. What are we missing? Well, we're missing anything that takes place off-chain. So we're missing anything on the Lightning Network. We're missing anything that happens on an exchange. Now, if people transfer to or from an exchange, that shows up in the on-chain metrics. But when the exchange does anything with itself or with a client or two clients do something with each other, none of that is on-chain. So if I literally told you, hey, I need you to go, do some analysis on a football game, and you're like, oh, okay, cool. What do you want me to analyze? And I'm like, oh, just write down all of the players that have I don't even know, just some portion of a game. Write down only one team's statistics and score. But you don't want to know the game score? You don't want to know what the other team does? You don't want to know any of their statistics? No. I only want to know what the Dallas Cowboys do. I want to know how many passing yards they have, how many rushing yards, how many completed passes, how many fumbles, how many points they score. I want to know all that stuff. And then at the end, you bring that to me, and I don't see the football game, and then you just show me that, and you say, they scored 13 points and had 86 rushing yards and 76 passing yards and 2 fumbles. And I'm like, whoa, those are great statistics. Awesome. Does that help me determine the score of the game? Is that of any use to me whatsoever if I'm only looking at a fraction of the total data and I don't have a look at the big picture? If I can't see what's actually taking place? No, it's useless. I mean, I could say, wow, that's a record. The Dallas Cowboys scored 13 points, and that's above average, and that's great. Or they had like 300 passing yards, and that's a lot for them. Or they didn't have any fumbles or interceptions. Good job, Dallas. That's all great. And I could say, compared to what Dallas has done in the past, or compared to their average, or a normal football game's average, or whatever. But it doesn't give me the big picture. And it's not 50%. It's not like analyzing a football game and only seeing one team. It's a fraction of that. It's probably at this point in time, because of the centralization of the exchanges, the mass amount of crypto that is literally held by these exchanges, and then the amount of crypto that's lost, and then the amount of crypto that, is sitting on a wallet that doesn't do anything, that doesn't move, you're looking at a tiny fraction of actual useful data. I mean, it's probably somewhere in the 5 to 20% range. So when you're analyzing 5 to 20% of a data and then trying to make conclusions based on the entire big picture, you're so far off. And short term, it might make sense. You might be able to say, okay, because of this and that, and compared to 6 months ago, or the last bull run, or this, that. But it's total bullshit. It's total bullshit data. And I'm sorry, I don't want, like, Willy Woo, great, good job, Will Clemente, to be like in college and like everybody's talking about you and you have all these followers. You don't fucking know what you're talking about. I'm sorry. You don't. And that's, and that's how I feel about on-chain data. So, you know what? It is what it is. And I'd be glad to debate anyone, anytime, on how on-chain data is useful. And you, for sure, you can make some definite conclusions. You can do technical analysis on on-chain data, but you're literally analyzing a fraction of the data and you're not getting the big picture. I promise you that. So when all of a sudden all this stuff starts failing, which it has been consistently, everything they've been saying, everybody's doing great, and the average price of Bitcoin that they purchased at, and this, that, and the other, but it takes into account some useful information, but you don't know what somebody came onto an exchange and bought at $50,000, and then now they own at $40,000. That you don't know any of that because they never actually took custody of the Bitcoin. All they did was traded on the exchange with the exchange or with another person, but none of that is in the on-chain data. So when you look at all the volume that's taking place, all the trade volume on all the exchanges, all the millions and billions and whatever volume that's taking place on these actual like total volume with all the exchanges calculated up, and then you compare that to the actual on-chain volume, it's literally a tiny little fraction. It's pennies in comparison. So just be careful who you're listening to. These people have no idea what they're talking about. People are still way too bullish right now. They are, it blows my mind, man. I don't want to see any of you guys get wrecked. I know you're all going to be fine because you have brains and you're smart and you guys have been learning and taking the time to educate yourself. But, there's so many new people out there, and my reach is a fraction of what some of these people are. I mean, a lot of these people have 1 million followers or hundreds of thousands of YouTube subscribers or whatever. And I'm telling you right now, we're closer to the end than we are to the beginning. And if that changes, I will be the first one to let you guys know. But we are literally fast approaching Wreck City. Between all the factors we talked about, the actual 10-year, everything going on at the Fed, potential yield curve flattening or inversion, energy prices spiking, global energy and food issues, potentially blow off top on energy in the near future, like spike highs, which were the same that we saw in 2000 and 2008. Inflation data coming in for the first time since the 1980s. Potential topping in semiconductor. I mean, we got to be real careful here, guys. Transportation sector is winding down as well. I don't want to be overly bearish on stuff, but look, when we look at the big picture, now is the time to be conservative. Now is the time to just preserve capital, protect our wealth, protect our, assets. And when the time is right, we're just a bunch of gators swimming around in the pond, snapping at fish here and there. But eventually, when the time is right, a couple tired, overworked, exhausted buffaloes are going to just wander into that pond, and we're going to tear them to shreds, okay? But we don't want to be that gator that goes looking for that buffalo, and then the sun comes up and we get all dried out and we get cooked. That was a weird analogy, but you get what I'm saying. So that's it for tonight. Hopefully you guys got some value out of the stream. Appreciate each and every one of you. Definitely glad to have a couple new group members coming in. Hopefully you guys have been enjoying the indicators. So we do officially have posted the new Jewel Thief as displayed in the stream today. As always, TJD, TDMACD, and the older versions are all available for free. And then obviously the master indicator as well. If you're interested in joining the group, you can reach out to me. Obviously, email is down below. If you're not using any of the indicators currently, highly recommend you go and check them out. Obviously, thousands and thousands and thousands of people are using the indicators, loving the indicators. The group is still a small, tight-knit community full of straight-up hustlers, gangsters, and paper chasers. So if you're interested, let me know. For everybody else, I appreciate all your support. Everybody, hopefully you're having a good year, off to a good start. Looking for some nice opportunities. Definitely looking to capitalize. I mean, we've already had a bunch of amazing trades this year. This year literally has just gotten started, and we already had, Viacom, Discovery, Chainlink. I mean, we've had so many trades already blow up this year. It's great, guys. Let's just keep it up, keep grinding, keep hustling, and we'll keep at it. So every Sunday, every Wednesday, we're doing our streams 8 p.m. till 10 or 11 p.m. Eastern Standard Time. So make sure you tune in for them. Post those snippets during the week. If you have any questions, asset requests, topic requests, or whatever, feel free to leave them down in there or shoot me a message, or obviously group members, to ask me about it. But yeah, that's it for tonight. Appreciate you guys showing up. Hopefully everybody had a good one. What do we got going on in comments over here? CW said, Honkiness says, which candles do you use? Which candles do I use? Just regular candles? Or you mean scented candles? You mean scented candles, don't you? Like to set the ambiance? Is that what you're talking about? I mean, no, I just use traditional candles, man. I don't use like fancy like Hikanachi or anything like that. I mean, you can use line charts, you can use Hikanachi, you can use whatever you want. But in my opinion, you're basically just taking out a bunch of useful information. The beauty of a candlestick is that you get so much information from each one. You get the open, you get the close, you get the high, you get the low. You get so much information from it. And when you start using like Hikanachi candles and stuff, you kind of miss out on some of that. Oh, scented candles? You know it, bro. Yeah, I mean, I like whatever, dude. A little bit of that. A little bit of that pine. Some of that cinnamon. Honkiness says it's a woman's world. CW says China stocks love you long time. Yeah, I love them long time too, man. They did a lot of good for me, but not so much lately. Oh, did we look at EDU? Did I actually close that off there? God, is that even still alive? Does it still exist? A buck 86. I've never been in a trade so long that literally did nothing. Oh man, I'm tempted to just flip that into like JD or something, and just if I'm gonna, well, I mean, we still haven't even hit the stop loss on it, but tempted to just like grab a little JD and just hold that instead. I think it'll eventually do good, but I don't know. We'll see. I'm not gonna mess with it. I think that's it though, right? Honkiness says it's a woman's world. It is a woman's world, man. Don't be a man, not in the United States especially. Probably around the world though. Definitely don't be an alpha, bro. If you're gonna be a man, be like a Charles Hoskinson man. Be that beta. Be that borderline female, bro. Get on stream and cry a little bit. Wear a sweater. Cross your legs. Okay, pee sitting down. That's what we want you to do. Okay, and you know what? Maybe even change your pronoun. Open it up a little, bro. CW said, didn't Superman threw all our nukes into the sun? Oh, yeah, I think it was something like that, man. The old school, like Superman. I think he did. think he turned back time, threw some nukes into the sun. I don't know. I was just joking though. Definitely don't need to nuke the sun. But I mean, that's like an analogy of like what I picture when these idiots are like, stop, like, well, let's stop using oil. But it's like every time in the past we have discovered like some new form of energy or made like a breakthrough in energy, we don't stop using the old energy. We just add the new energy and we become more productive. I mean, look at like humans in like caveman days. It was like the big difference that like allowed us to basically like form civilizations and like grow and evolve was our ability to basically like farm and like store, preserve, cook meat. Like those were all key things. Well, what is all that? What is food? It's energy for our bodies. So instead of spending all day, every day going out and foraging for food so we don't die, we were able to like store it and then grow it and then, you know, basically create like societies and functionality. Therefore, like instead of every man going out every day, like hunting so that we could stay alive and every woman like staying home and like farming or, you know, taking care of the children, we were able to like specialize into different fields. So one person could more efficiently hunt. So then somebody else could like stay home and do whatever, you know, or do some other different job. And, you know, that's what allowed us to become so successful. So now it's like, oh, well, let's just forget about all that. Let's forget about the tens of thousands of years of evolution and functionality, you know, that we've done as a human race. And let's just start eliminating energy sources, you know, because we don't want to hurt the planet. Like, what? You want to go to carbon neutral? People are made of carbon. Like, if we go carbon neutral, that means there's no more people. So, I mean, I don't love all people by any means. I mean, I like, in the broad sense, I like love people like humankind, but I'm not like, I mean, I'm not going to shed a tear for just anybody, if you know what I mean. But I mean, I don't think we should go carbon neutral, if you know what I'm saying either. I don't think we should just not have people anymore. That doesn't seem like a sustainable game plan for, you know, people. But anyway, that's it. Hopefully you guys enjoyed the stream tonight. Always good to see you. If you got any questions or anything, just holler at me. That is our Sunday night market wrap up or market look ahead, but stream wrap up. It is 10:40 p.m. Eastern Standard Time on January 9th, 2022. I am Crypto Trend Trader. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And that's it for tonight, ladies and gentlemen and bots. I'm out of here.